Good morning, everyone. Thank you so much for joining on a weekend. I'm Ankit Kanodia from SmartSync Services, SEBI registered investment advisory firm. Welcome to the second episode of Investing Karwa, a Mission Smile initiative to learn from the journeys of the smartest investors. And today our guest is Vishal Khandelwal, who is the founder of Safal Niveshak. He has spent more than a decade teaching people how to save and invest well using the lessons he has applied in his own life to achieve financial freedom, doing work he loves with people he likes, and at the time of his choice. What a role model for all of us, right? There is a reason why we started our investing Karwa with Professor Sanjay Bakshi and Vishal. There is no debate on this. These two gentlemen have done so much to the retail investing community and inspired so many individuals like us to start our investing journey that it makes perfect sense to pay them a tribute and learn from them. This is what we all know about Vishal. Let me now tell you a story which very few know about. Safal Niveshak unknowingly planted the seeds of SmartSync services. Yes, it is through my participation on Safal Niveshak that I became friends with Akhilesh Pathak and Anshul Khare. And only because of Akhilesh and Anshul's support, I could gather the courage to leave my decent family business and together, Akhilesh, Anshul, and Ankit, the three A's, embarked on an exciting and challenging journey of SmartSync services. And I'm sure our journey is one out of so many which has been inspired by Safal Niveshak. So thank you so much, Vishal, for your invaluable contribution to the investing community. I know all our Mission Smile members would want me to shut up so that you can do the talking. So I stop here. It would be great if you can start with an opening remark and then we will straight away move to the questions. Over to you, Vishal.
Thank you so much, Ankit, for inviting me for this session and right immediately after Professor Sanjay Bakshi, whom I hold in very high regards. So it's my pleasure being here talking to you and your members. And like you mentioned, one of the aspects of financial freedom is that you get to choose the kind of people you want to work with, right? So I chose to talk to you and your members because I love being in your company and you guys carrying the same kind of work, and I hope lot of miles to go, a great journey to cover over the next few years. So for inviting me for this session, and I look forward to sharing my story and
Thank you.
also
Thank you so much.
thank you.
Uh, is it only me or everybody is facing the same issue? Vishal, is internet on your side is okay? Before I begin the questions.
So Ankit, I'm not able to hear you properly. There's some disturbance somewhere. I don't know.
Okay. Okay. Can you hear me now, Vishal?
Yeah. This is better. This is better.
Okay. Great. Okay. Thanks, Amar. I got your message. Yeah. So, I'll straight away start with the first question, Vishal. You have been instrumental in introducing the value investing concepts to Indian retail investors, and you have been doing this for over a decade now. However, your own journey, investing journey, started much before that. Can you please take us through that first moment when investing caught your attention? How did this all start for you?
Well, I've written about it on website, right? So I think getting into stock markets was purely an accident for me. I was in Bombay to do my MBA, and I was preparing to get into the foreign exchange market. So that's something that was exciting me at that point of time. Reading a lot of literature and learning a lot from people who were in the foreign exchange market. In fact, my summer project was also in the forex market, right? So but that was 2003, where I was about to finish my MBA, and there were very few jobs which were available in the financial markets, right? We were all coming out from the dot-com bust. The global economy was down, Indian economy was down, jobs were scarce in the financial markets, and So there's this company called Equity Master that came for a campus placement. They came there for the first time and they came there for the last time. And they had just one position on offer, that for an equity research analyst. And I had no idea about what an equity research analyst generally does, though I had some idea that, okay, I had to look into businesses and write reports. So that was the only thing, right? How do you go about researching? What exactly do you look at in businesses when you're researching? How do you write reports, right? What evaluations exactly? I was not really so sure about, because you don't get taught these things in MBA, right? You generally security analysis, which is mostly theoretical and numerical, mathematical, and very complex. So that was not really my area. I've never been good at maths, right? Still not good at maths. So that was not really my interest area. So I thought stock market is all about mathematics, and that is what really kept me away from reading about markets and investing. Though I had read about Buffett, right? But I only knew him as the richest person in the world who's done investing and who's become rich through stock markets, right? So the job profile, there were around 50, 60 of us who in the finance division who applied for that. I got extremely lucky that they but that was my entry to the stock market. Initial days were very tough. As I mentioned, I had not much idea about how to research and analyze stocks, but that is where I learned, right? Because I had no background in research. That really gave me a lot of reasons to learn much deeply about research, right? So there was not much of unlearning which really happened during those initial years, right? So that was my start. So I did not find the markets found me, right? So I would rather say that. So it was purely an accident, and the journey has been great. Gradually being into that job, since we were not brokers, we were independent research house, right? So we were just writing research reports and reading about companies and thinking and writing long term that time. So came to know about Buffett, came to know about Munger, right? Gradually started reading about them, got enamored by their learnings, not just on investing, but also on decision making in life, right? And the journey moved on. So 2008 struck, right? So till that time, 2003, 2008, 5 years, the first 5 years of my investing career were a bull market, right? So the best bull market probably the India has ever seen. Sensex moved from around 3,000 levels to around 21,000 levels. We all know, right? A 7x in those 5 years. And there were a lot of stocks which moved even much higher, right? You had power infra stocks that really moved almost 10 times, 50 times, 100 times. So it was all good, right? And I was researching stocks, I was recommending stocks, and I thought by 2007-8 that everything that I recommended and researched was turning to gold for the investors, right? So there was a lot of arrogance that was built in due to the bull market, right? And I had never heard Buffett's quote that time, that it's only when the tide goes out that you realize who's swimming naked, right? So a lot of us analysts were swimming naked at that point of time when the tide went out in 2008, right? Though we were on a better side because we were not brokers and we were not pushing bad stocks. We were writing research on good stocks, high quality businesses. We were advising people to hold on to high quality businesses, but none of us in the analyst community, in fact, foresaw what was about to happen, that 2008 crisis. And that was really the point that really led me to introspect whether I wanted to research and advise on stocks for a living. I think the answer was no at that point of time. But again, the savings were less, investments were less. I had no financial backing to really quit my job and do something, which I really gathered over the next 3 years, 2008 to 2010, where I saved a lot of money. I invested a lot of money. The markets started doing well, and I got a chance to repay the only liability which I had, which was a housing loan. And the day I repaid the final check of my housing loan, I not offered, I in fact put in my papers and I just said to my boss, I'm leaving. I want to do something on my own. I don't know. I want to do something in terms of writing on value investing, but I'm not really sure I'm going to earn money. But I think that was just the start. I took that risk, and over the last 11 years in hindsight, lucky for me, it paid off. So that has been my journey in a gist.
Fascinating, Vishal. And what is more what is something which I take out of it is how easily you have accepted where you were wrong, where the arrogance was there. Not many people, even today, when we are working and when we are investing, not many of us can accept our mistake and accept our ignorance. So that is something which I personally take from this answer of yours. So now moving on, tell us more about your evolution as an investor over these years with some examples as to what you were doing or not doing when you started up and how things kept evolving over time. Because you have, I think, more than a 20-year of career investing in stocks, right? So if you can take us through that, that would be great.
So as I mentioned, I started as a research analyst, and the first 8 years were working as a research analyst. Being a research analyst, we were not allowed to buy stocks directly, right? Especially in the sectors that we were tracking. And I actually followed it with complete integrity. So there was no stocks which I bought in my wife's name or brother's name or sister's name. It was no stocks, only mutual funds at that point of time. But yeah, there was a lot of research which I was doing. I was gradually framing my investment philosophy in terms of if I had to pick stocks and if I had to recommend stocks to retail investors who were like my family, right? So when you're talking to retail investors, and I used to talk to a lot of retail investors who were probably my father's age, my grandfather's age, or my grandmother's age, all those kind of people, right? I got connected to all those real life people and not just a broker advising to random people about stocks, right? Tipping stocks, small stocks, hot stocks. So we were not doing all those kind of things, right? So that was, I think, the genesis of my investing philosophy, that you can be right, you can be honest, and you can still survive in the stock markets, right? So luckily I had a founder promoter for the company, Ajit Dayal, who was also the founder of Quantum Mutual Fund, right? So Ajit was one of the people I used to look upon. I still look upon him, right? He was one of those guys who would not do a single dishonest thing, right? Even at the sake of losing market share or losing business, all those kind of things. So learned the ropes of honesty and integrity early on in my life. And so my evolution has not been very volatile. It's not that I started with trading and losing money and then I gradually moved to value investing and long-term investing. I started with long-term investing. Though I did not really focus a lot on intrinsic value, I was still focusing on stock prices, right? I wanted my stocks to make me rich over a period of time, right? And I made a lot of mistakes over there, both mistakes of commission and omission, right? But I think in the initial part, I missed a lot of opportunities because I was too strict with my investment process, right? I did not buy a single stock, did not really believe in businesses that owned even small amount of debt, right? Which I changed over a period of time. I advise people to sell stocks when the stocks move to our target prices, which was not a good idea because in a life of a multi-bagger, right, you will have many twice, 2 times or 3 times or 10 times, right? So selling good stocks early, not selling bad stocks because we were into research, right? But even in 2008, when we were recommending stocks, most of our recommendations were not sells, they were holds, right? So over a period of time, I realized that there's no hold, right? You either buy or you sell, right? If you own a stock in your portfolio and it's not worth buying today, you should rather sell it, right? So that is one of the things which I've learned along the way. Not focusing on stock prices is something which I've learned along the way. Uh, Focusing a lot on the quality of management is something which I've learned along the way, right? Initially, we were looking at good managements, right? But now I am looking at ultra good managements, right? The problem in India is that you cannot find someone who has no sin to his or her name. I think you need to find the person who has done the least amount of sin, right? In his a role as a CEO or a founder promoter. But yeah, that was, I think, one of the parts of the evolution of in my journey as an investor. Another thing which has changed over the last 10 years is that I used to meet a lot of managements, right? In my role as an analyst and in research analyst, that was part of the job profile. The last 11 years of being on my own, I've not met a single management. I've not really attended a conference call. I'm not saying that it's a thing to do, but for me, I think that's been perfectly fine, right? Meeting managements, not meeting managements, I don't find any difference. I get my information and ideas from publicly available documents, right? So that has changed as well, right? I have slowed down a lot as far as investing is concerned. I'm not really beyond the next stock or the next multi-bagger. If I can find one stock idea per year, I think that's more than enough for me. So I have slowed down a lot, reduced a lot of stress in my investing life. And one major change which has happened is that I now buy stocks with the idea of not selling them ever, right? So it does not mean that I want to buy and forget. It simply means I want to buy and keep reviewing, like right? Or sow seeds, right? Is not really passive. He's still active, but he's still waiting for the crop to grow. It's still waiting for the farm to produce stuff over a period of time, right? So I'll buy, I'll review, and if things are fine, I'm not going to tinker with my portfolio, right? Which was not the case earlier when I started. When I used to do some tinkering, when I realize that, okay, I made a mistake, or I realize that, okay, the stock has met the target price, let me go and find another opportunity. So I think that has changed a lot, right? In terms of reducing overall stress on the portfolio, overall stress in my life as a investor. I think that's one major change that has happened over the past 11 years.
Fascinating, Vishal. And moving from investing to investing community. So when I mean investing community, I mean to say the community which you made through Safal Niveshak. So take us through its initial days. What made you start Safal Niveshak? What were the biggest challenges you faced? Who were some of the key people who helped you then? And what were some key learnings you got out of this whole process?
So if I remember right, I in fact started Safal Niveshak website in a local train in Bombay, right? So that was way back in 2010, right? Before I quit my job. So I did not really start my website very actively, right? So I initially formally launched Safal Niveshak in July 2011, which is just around like 15, 20 days from now, right? So 9th July is when I started Safal Niveshak. I think the idea of Safal Niveshak came in 2008, as I mentioned, right? The seeds were sown there that you being an analyst, you are not the master of the universe. You end up making a lot of mistakes. And if you are recommending stocks, and if you're researching and you are advising people on stocks, and those people could be anyone of any age, right? You're not really sure about who's going to buy your recommendation. You may actually end up causing problems to them, right? Because a stock or an investment advice is not same for people of all ages or people of all financial backgrounds, right? Things are different for others, right? So you have to be person specific and not stock specific. That is what I've understood. Right. So 2008, when the market crashed, you realize that you were not master of the universe, right? And you need to avoid making a lot of those mistakes that also get other people into problems, right? So that is where the idea of getting down on ground, helping people learn how not to lose their money, right? Because I've seen my family and a lot of distant relatives lose a lot of money in 2008. I had, in fact, when the Reliance Power IPO came up, right? We were the only house, and I was the analyst over there, power analyst, and I think we were the only house in India, research house, who said avoid Reliance Power IPO, and we were like castigated, right? What are you guys saying? In fact, before the IPO and after we released the report, we were in fact called by the Enforcement Directorate to, and they were questioning us why were we giving a void on Reliance Power IPO. Just imagine a government agency calling us to question our view on a private company's IPO. So you know the kind of clout Reliance had at that point of time, right? So but we stuck to our view, and it paid off, right? I had a target price of 40 rupees after doing a 25-30 year DCF, believing कि यार 25-30 years में कुछ तो आएगा, right? So 25-30 years DCF we did, I did in fact, and then there was the target price, the intrinsic value was coming at 40 rupees, and nobody believed us, right? So my family got saved because my father took my advice that time, right? And I realized that time it was so important for me to go on ground and help people learn how not to lose their hard-earned money in investing, which so many of us have seen in our families, in our distant relatives, some other friends. So that was the genesis of Safal Niveshak. In 2010, as I mentioned, once I repaid my housing loan, I offered my job, right? In the sense, I gave up my job, I quit my job. I had some idea that I had to write articles on value investing. There was so much wisdom from Buffett and Munger that I had read in the previous few years, especially after the market cracked in 2008, that I thought that nobody was doing this kind of a thing in India in terms of simplifying the lessons of these great investors and the principles and bringing them to the individual investor, right? So I did not have that kind of knowledge bank, or not that kind of wisdom bank for me, except buying expensive books or buying Poor Charlie's Almanac. In fact, if I remember, in 2007-8, it was priced around 2,500, right? And I could not buy that book because it was too expensive that time, right? But I got to read that book through a friend who offered me that book for some time, and that completely changed my perspective, right? So the idea of inversion took roots there, how to not lose money, right? In fact, instead of always trying to earn a lot of money, I think that was the point where I learned that inversion is such a powerful thing, right? Mental models are such a powerful thing. So the base was built that time, right? I had no idea how I was going to earn money, whether people are going to pay for reading articles on the website. No idea. Nobody was doing that at that point of time, right? There were websites which were doing personal finance stuff, mutual fund stuff, all those kind of things. But on stocks and value investing, was no except Equity Master, where we were recommending stocks using value investing principles, right? So I started with the idea of launching a Hindi website, right? And that was the reason I thought of a name called Safal Niveshak, right? But then soon I soon realized, and it was good for me, that there was a much bigger market in India for people who could consume English stuff. And for me as well, though I am from a Hindi heartland and I speak Hindi at home, I could think better in English. I'm not sure that's the upbringing as far as the English medium education is concerned, fortunate or unfortunate, right? So I thought that I could do better justice starting a English website, and that is what I started. Kept the name Safal Niveshak. I don't know why I kept the name Safal Niveshak, but I started an English language website. Just kept writing on a daily basis. I used to write one article almost per day. If you go to my archives and you'll see the first, I think 3 or 4 or 5 months, you'll almost find 25 to 30 articles per month, right? My idea was to just show up every day, just to write, just to keep practice what I was thinking, right? And the only readers of my website were my wife, my father, and a few of my friends who I forcibly sent my articles to read. Right, gradually, and as subscribers started coming in, trickling in fact, uh, there were days, in fact, there were months where I had just one person signing up for the Safal Niveshak articles on a daily basis, and I used to be so excited, telling my wife, "Okay, someone has signed up, someone has signed up." Right, so in hindsight, those were really great days, right? When I look back, the struggle that I went through in terms of just writing on the stuff, even when no one was reading, I think that paid off, right? I got immensely lucky that I got to learn these things. Internet was really, I think the initial years, I would not say very initial years, but I think they were very early years as far as internet and blogging and professional blogging was concerned, right? So I think I was lucky that I started at that time. Uh, I have always been a loner, right? So I have not really, I've always shied away from seeking advice from people or talking to people. And that's the reason you don't find me on any WhatsApp group or Telegram group and all those kind of things. But also, as far as Safal Niveshak is concerned, I learned the technology. I built the website. I learned WordPress. I learned how to send emails. I learned how to write, right? Even till today, 11 years later, almost everything, or not almost everything, everything on Safal Niveshak, including writing, posting, publishing, website, right? Writing the book, getting the book edited, right? Packaging the book and sending the book, right? So from A to Z is something which I do single-handedly. I have my wife, I have my family for support, right? In the interim, Anshul had started working with me for 3 or 4 years. But then I have always been a loner, though a lot of people indirectly have helped me, right? Lessons from Buffett, Munger. Then Professor Bakshi came in, and he was a good guidance over there, right? A lot of friends join in, but I've always done things my way. I would not say I think that is an arrogant way of looking at things, but I think I've always found solace in being alone and working my way in my time of my choice, right? So I think in hindsight that has paid off. I think I'm perfectly contented, perfectly happy, right? No guilt, no regrets, right? I've not really targeted Safal Niveshak to grow at a specific level. People come in, people go out, right? I sell courses. I don't really push my courses. I've never done any advertising on Safal Niveshak or anywhere else. Everything has been word of mouth, right? So I think by the grace of God, things have worked out well. So yeah, we are here talking about it.
Great, great. So, Vishal, I'm reminded of that Safal Niveshak phrase, that Hindi phrase. If I'm not wrong, one of you in one of your old posts, Shen Parish of Farnham Street addressed you as "Dear Safal." It's nice reading your blog, and then you mentioned in the reply that Safal Niveshak is the blog's name, and my name is Vishal. Am I right here, Vishal?
Yeah. I still receive a lot of emails from people, even in India, who call me Safal. So that's good, right? Right. Earlier, I think I'm not really sure whether Safal in India generally in the initial period, I think there's a company called Safal, I think Mutter. so
Yes.
so my kids still make a fun of it, right? So I think they say that's a much more popular brand than Safal Niveshak. I'm perfectly fine. Yeah. So, but I think if people are calling me with the name of Safal, I think even that thing has worked so fine.
And before moving on to the next question, in one of the replies to the questions where you mentioned about the farm analogy, Achilles has just posted in the chat section. Really like the farming analogy, Vishal. hearing this sitting at our farms under the same mango tree where we had our lunch when you were here last time. So I just
That's
thought
right.
I should read that before we move ahead.
No, I think there's a great similarity between farming and investing. And I love being at your farm, Akhilesh. I think you guys are doing a great job there as well. Apart from educating retail investors, I think in terms of organic farming and everything. So I think, yeah, it was great there. Being there could associate a lot of my upbringing, my life, coming from a small town India as well, right? Being close to farms and everything. And now associating that with how investments should be done. I think so, yeah, great.
Thanks, Vishal. So we have all learned a lot from reading your blogs. I remember participating in all the research competitions you have organized till date. And so tell us more about your writing process and how this helps you become a better investor, right?
Great. So, yeah, I did a lot of, I think a few value investing contests, and Ankit, you won a few of them, in fact. So, congratulations to you again. Right. Writing process, I think one of the core ideas for me when I'm writing or when I'm sitting down to write is to write like I'm talking to a friend, right? And I don't really write with a general sense in mind that this article or this idea that I'm talking about should touch everyone's life. I don't aim to do that, right? My idea is that if my post or my articles can touch just one life, right, per day, right, I think that's a good enough target to be met for me. I think I'm very happy when people write to me that they were going through some situation where the article which I wrote recently, right, had really changed their perspective, and I think that's all I need, right? So writing like I'm talking to a friend, writing very simple stuff in a world where complexity is rewarded and simplicity is not really talked about, right? Because what I've learned is that if you can write simply, it means that you are thinking simply, right? If you are thinking complex stuff and if you have too many ideas in your mind, right, it's very difficult to put them into a coherent piece of writing, right? So saying no to a lot of information and ideas that get into your mind, like Sherlock Holmes said, right, it's your brain attic that you have on top, right? And you have a lot of furniture which is stacked there, right? The more you get, the more new furniture you get into your brain attic, the more you need to move out of the existing furniture, right? So the more ideas and the more information I try to get into my brain, all the good ideas and information and wisdom that has been collected there for the last many years would move out, and that really has kept me away from a lot of noise, newspapers, and all those kind of things, right? So that really helps. Reading a lot helps, right? So a part of writing process, I think it's a very important part of the writing process, is that your writing improves if you read a lot, right? Because when you are reading good stuff, right, when you are writing, if you're copying from the book by hand, I think that's one trick which I use, right? When I love a passage, right, I copy it down by hand in terms of feeling how the tone feels like, in terms of understanding how the words flow, right? The words are like music to the ears, right? And that gradually becomes a part of your own process, right? Then otherwise, of course, there are tools and techniques in terms of writing an active voice and not using much of adverbs and using the FK test, which is on Microsoft Word and even I think on Mac as well. So those tools and techniques have really helped. But the idea is to write simply, write for a friend in a very conversational language, and then of course using the famous Feynman technique, right, where if you need to really learn an idea, you need to learn it so well that you can explain to a 5-year-old child, right? If the child understands, you've really learned the idea. If the child does not understand, you need to go back to your original idea. You need to learn it even better, right, so that the child understands in the second or the third or the fourth instance, right? So using the Feynman technique of writing, of being very simple in your ideas, right, trying to learn them very thoroughly, right? Keep learning. I think that's what Charlie Munger's idea is all about, right? You need to be a lifelong machine, lifelong learning machine, right? So overall, all these things combine to create the writing process. I would not say there's a checklist which I follow every time I write, but I think that has become part of my writing process after learning about it, after writing for almost 11 years. Not 11 years, I've been writing for the last 19 years. But the kind of writing which I'm doing on Safal Niveshak, I've been doing for the past 13, 14 years. So I think that has really helped. Writing a lot has helped a lot.
Yeah, and the second part of the question was how it has helped you become a better investor. So how do you link it to investing?
No, I think if you go back and look at the best investors in the world, whether the Charlie Munger or Warren Buffett or Howard Marks or Seth Klarman and all those kind of things, they have been great writers as well. right? So I'm not sure what came first for them, but I think it feeds into the right investing feeds into good investing, thinking feeds into your writing, and then good writing, which is based on good thinking, also feeds into investing, right? My idea is that whenever you're researching a stock, whenever you are preparing a thesis, you should not be preparing a 10-page thesis or Excel modeling. All you can do that, right? But if you cannot summarize your thesis in 100 words in a very simple language that you can explain to a child, right? Not forcibly, but yeah, you can really explain to a child. I think that is where you understand what you are getting into, right? If you cannot explain to a child a investment thesis, right, why you are making investment, the one that you're making, I think you still need to fine tune your investment thinking. So I think like Buffett says that being a businessman has made him a better investor, and being an investor has made him a better businessman. I think that also goes with writing. I think being a good investor has helped me become a better writer, and being a better writer or over a period of time has helped me in terms of fine tuning my investment thinking. Right? Because as I mentioned, the most important thing that I follow is trying to be as simple as possible in my communication, in my investing, and I think that has helped. So
Thank you.
there's a cross connection. Yeah.
Moving on, Vishal, Safal Niveshak has gone through a lot of changes over the years, and along the way, it has touched the lives of many people. How do you see it 10 years from now? And why I'm asking this question to you is because your recent post and the wonderful 1% show revolve more around the thinking process and lifestyle rather than investing. So, if you could dwell more upon this one point, that would be great for all of us.
No, I think it's good that you talked about the 1% show, because that has gradually been my philosophy. So I've never thought in terms of 10 years. Even when I'm looking at business investing, I am investing in them gradually now forever, right? In the sense that if the business remains good, I'm not going to sell it. But I also try to understand where the business may go, right? Broadly over the next 10 years, 15 years, 20 years. But when it comes to living a life, when it comes to running Safal Niveshak, I have never created a 10-year or 5-year or even a 1 month goal, right? I just keep working, keep doing stuff. Any idea comes in, I just try to implement it if I think that makes sense and I can sustainably do for a longer period of time. I have started stuff. I have closed them randomly. If you remember, since you've been reading Safal Niveshak, I used to do stock talk earlier, right? And I did multiple version of stock talk, and I tried to improvise, but then I was not really comfortable with that idea, and I'm sure you're going to ask me a question about that. But I was not really comfortable with that idea, and I closed it because I had no one to answer to. Right? That's the best part about working for yourself. You can start things, you can end things. There's no one you need to be accountable for to answer for except yourself. Right. So the 1% show and the 1% idea is what I have always believed in, that you need to work on the systems. You need to work on that 1% improvement daily rather than focusing on where you want to be. Right. uh, I think I'm not sure who said it, but someone wise really said that we are not nouns, we are verbs, right? Nouns is like I want to be the best investor, or I want to be a fund manager, or I want to be an investment writer, right? Verb is I want to write, I want to manage money, I want to advise stock, which means what you are doing now, right? Rather than where you want to be, right? So also talking about what Manish Chokhani, I think, mentioned in the first episode of the 1% show, right? The purpose of life is to just flow, right? You like a river, right? You don't know where you're going to end up, right? And you don't want to worry about that, right? Wherever you can flow, despite all the hurdles, you keep flowing, I think, and you'll find where you want to reach. And I think that is what has been my philosophy. So same with Safal Niveshak. I'm no idea where I'll be 10 years down the line of Safal Niveshak, whether it'll be existing in the same way or not. Right. I've started gradually moving more towards much broader things. Right. As I age, I think I understand that there's a great benefit in zooming out a lot of things, right? Rather than focusing on micromanaging your life or micromanaging your investments. I think the idea is to zoom out on things, zoom out on life, and look at much more broader aspects, right? Try to be probably more philosophical, right? I think I enjoy doing that. I enjoy being more philosophical in the way I look at life, and I think that really shows up in my work, I think, as well. So I'm not saying that I'm going to shut down Safal Niveshak. I may shut down Safal Niveshak someday, but my idea is to talk and write more about the bigger aspects of life, and that is what that I'm sure if you've seen this a 1% show, the kind of questions which I ask to my guests, I think they revolve more about zooming out on life, the bigger aspects of life, much bigger than investing, right? So I think that is something which I have always been doing, gradually probably being attracted to, not now, but always being attracted to something which is not related to money, which is not related to materialistic thing. Though I am working in the materialistic space of finance, but probably my heart is not here. Right? My mind is here. I want to earn money. I want to get richer. Perfectly fine, right? And I sell courses, right? People, I see a lot of people in every houses, and how can you sell Buffett and Munger's advice when everything is available free? I'm perfectly fine, right? Like everyone else, I'm a human being, right? I want to make my family happier. I want to take my kids to Disneyland, right? And if you need to buy, if you want to buy my course, buy my newsletters, you're perfectly welcome. If not, you're perfectly welcome. So I've done my thing. I've done things my own way, right? I'm not really bothered about whatever people are saying. I invite people to send me their feedback, suggestion, criticism. I perfectly accept that with complete honesty and integrity. But I've always been like that, right? I am a loner. I like working in a solitude. I like living life my own way. So of course, the idea is to leave this place much better than I found it. So that's the broader idea, to become much more useful for others who come in contact with me. That's the bigger idea. But yeah, my own way, which does not hurt others. So that's always been. So no 10-year plan, no one-day plan. Today's plan, if you ask me, I'll tell you that I'm going to write something for the coming Thursday.
So that was fascinating, Vishal. And I think one good, big thing which I learned from this, or I suppose many of our Mission Smile members will probably agree with me, is that we all somehow we all want to live our life our ways, right? So how we can do that, as Vishal has shown, is that if you can become financially independent early in your life or at whatever time, once you become financially independent, that is the time when you have to ask these questions. Many people, even after becoming financially independent, they stay in they stay and act like prisoners, and they don't realize that they don't need to do these things, right? So that is probably the biggest learning from this response of yours uh, to our last question. So I'll move on to the.
I may just want to add one more thing, since you mentioned about financial independence, Ankit. So I think I tweeted about it yesterday as well. So financial independence, I've never looked at, right? So I'm not a goal-based person, right? I have not really looked at even when I had not much money or very little money just to run my household. We were happy in that house, right? We were content with what we had. Though we always tried, or I always tried to become better in financially, right, or earn more money, right, by doing the right things, right. But I think that is one lesson which I have talked to whenever I talk to youngsters or people who are young adults, right, who want to become rich and achieve financial independence one day. That is perfectly. It's a good uh, vision to have in your life, that I want to achieve the benefits of financial independence, but trying to get there early, right, trying to find shortcuts, because this is what a lot of financial industry is going to sell you, right? How can you get richer fast? And you go open YouTube, and there are people, respected people, who are there talking about how to become richer faster, and the top 10 stocks to buy or top 5 stocks to buy that are going to turn multi-baggers. I don't buy into that stuff, right? The idea is to take it 1% at a time. The idea is to have financial independence as a mindset, that you live on a daily basis, not as a goal, right? If you live financially independent on a daily basis, not worrying about money, of course, you need basic money for sustenance. That's a given, right? But beyond that, I think we end up chasing a lot of times goals which are not worth chasing, right? So rather than that, if you just live with a mindset of financial independence, even today, that you have enough, much more than anyone else, so much more than probably 80-90% of people in the world, I think, live with that idea of gratitude, I think you're already financially independent.
So, since you have talked about it, Vishal, I think I can give a very relevant example here. Everyone knows about your example for sure, but I would like to give an example of Akhilesh. So, for example, he was being offered an 8-digit salary from a from Google. I would like to take the name of the company also. And he chose to say no to that and come here, work for something which he really believes in, where he is really passionate about. So that is what is financial independence. So if you would take out a calculator and calculate his net worth, probably you will not find him financially independent. But I see him a very good role model for all of us, where he is actually independent and he's doing his work. He's living his life the way he wants, right?
Yeah,
So
yeah.
even
That's
today
the
when we
idea.
are, yeah, that's the idea. So even today when we are having this discussion on investing, so he's there at farm and attending this. So that is how
That's good.
he's living his life, right? Yeah.
Great. So for doing this session, Akhilesh, please send me a kg of mangoes from your farm. I'll be happy to do
I'll unmute Akhilesh to respond to this.
that.
Yeah. Akhilesh, you can respond to this.
Akhilesh is disappeared.
Yeah, sorry, Vishal, I was still muted, but mangoes are coming your way.
Thank you so much.
Yeah.
Thank you so much, Akhilesh.
Hello. Let's come back to investing, and this question is pretty more deep into understanding businesses and investing. So in one of your very old presentations, if I remember correctly, I don't remember the time, maybe sometime in 2012 or 13. I remember in in that presentation you said that, or you suggested that if you have 10 to 15 businesses in mind that have a great potential to grow sustainably over the long term, say 10, 15, 20 years. Of course, nobody can have that kind of a view for business today. Uh, you keep on reviewing businesses every year, every 3 years, 5 years, but you have a reasonable understanding of the business and you think that these are good businesses which can sustainably grow. And Vishal suggested that you should buy all 15 of them every month over the next 10, 15 years, provided the business quality remains the same. And when you presented to it, I believe that you had an average retail investor in mind, right? So what is your view today? Do you still believe in that view, or have you changed your thoughts here? Anything you'd like
No,
to?
I think that's one of the good ways to invest for an average retail investor. I think instead of chasing alpha, instead of chasing the next multi-bagger, right? It's a good idea to identify those 10 to 15 businesses and probably start SIPs in them, that the dollar cost averaging kind of a thing, right? Maybe doing an SIP along with in a mutual fund or an index fund, right? If you could create your own indexes, your own small index, right, of high quality businesses that you understand, right? It's a good idea to do that, and I stand by that view even now. In fact, I recently did a study on magic formula investing, right? Joel Greenblatt's magic formula, and I did some basic back testing in terms of the magic formula list going back 10 years, right? And what I realized is that, in fact, I think 10 to 15 years, and what I realized is that there a lot of those stocks, I would not say 100%, but I think on an average, a portfolio of magic formula stocks did much better than an index in India as well. I'm not saying that you blindly go by that, but what I've done recently is I just for my courses and for my workshops, I created a magic formula list myself, though I also included quality parameters. Joel Greenblatt only talked about return on capital and earnings yield, right? The only two parameters that he's mentioned in the magic formula thing. But I also included the debt to equity. I also included long-term return on capital, return on invested capital, right? Earnings and sales growth. So I fine-tuned that model to get in even much more better quality businesses. And in hindsight, those businesses have done well, right? In hindsight, those businesses have done well. And I think by going by the names that are there on the list and going by my understanding of the potential of these businesses, I think that's a great list to have, right? So simplifying, the idea is to simplify investing rather than focusing on the next multi-bagger and focusing on market timing to get or enter or exit a stock. I don't believe in market timing. I believe in finding good businesses, thinking like a business owner who's not going to sell his or her ownership in a business just because the markets are rising or markets are falling, right? So we all talk about thinking like a business owner, but to actually think like a business owner is very difficult. The day you realize that you can start thinking like a business owner when you are buying stocks or owning stocks, I think your perspective completely changed, right? So probably that was also a change in my that also caused a change in my perspective when I said that I have moved from selling stocks when they met the target price to not selling stocks at all. right? Because I am thinking like a business owner till the time the business is fine, even if it's giving reasonable return and not the best market beating returns, right? Even if the management quality is really good over there, and there were, even if there are some like few quarters of bad performance and everything, I'm going to I want to keep my focus and keep my faith in that business till the time the business and the management is clean and good, right? Um, and owning those kind of stocks and keep buying those kind of stocks in bits and pieces every month, I think it's perfectly fine. Nobody knows what's going to work, right? It's only in hindsight that we find that this strategy work or that strategy work, right? But I think what really makes sense, going by the learnings of the best investors in the world over a period of last 40, 50, 60 years, I think what I've realized is that just owning high quality stocks, and Nick Majuli, whom I interviewed in the 1% show, who's written a book called Just Keep Buying. So just keep buying those high quality stocks month after month, whenever you have savings enough to buy those stocks. I think that's a perfectly fine way to invest for most investors out there. Right? Nobody knows anything. I believe this. Nobody knows. Don't know anything, right? Especially people who come on television and who are all there on the media, on YouTube and everything, and Twitter, professing or proclaiming that they know something. Especially now in a world of inflation, everyone becomes an economist, right? Or a downturn specialist, right? So I think there's too much noise out there, right? Focus, like Arjun, right? Focus on that eye of the fish, and I think you'll be fine. You'll be fine over a period of time. We all chasing alpha. I wrote an article long time back. Being average in the age of alpha is perfectly fine. You don't need to aim for being average. You need to aim for becoming something good, much better than you are today, having a great portfolio. But you should be fine settling for average. Average means an index in India or globally, right? If you're earning an index return, if you're buying an index fund, which is a low cost, I think if you don't want to buy stocks, you either buy an index or you create your index, your own index. But the idea is to stick with that index for a long period of time, not just change it every month, right? So sticking to that process and the philosophy and a portfolio for a long period of time, I think this is what has been my biggest learning, and this is what I advise to almost everyone I meet.
Yeah. So when you're talking about average, I'm reminded of Morgan Housel's words on average. I think he wrote in his book also, and also in one of his blog posts, where he says that he basically quoted someone else. He said that genius is someone who does the average thing when everybody else is losing their mind.
Yeah.
So that is one. And I had a specific reason why I asked you this question, because as you said about your back testing, we also did a back test on Infosys. So we all know about the Infosys story, where if you would have bought Infosys at the height of 2000 Y2K mania, and if you would have held Infosys for 2000 for 8 long years, you would have made zero money. But here's the fun part, or the interesting data which we have found, is that if you would have started investing in the Infosys shares right at the time of the height of Y2K mania, and you just bought Infosys each and every month, first day of the month, you would have still made 13% XIRR in that 8-year period when the stock gave zero returns. So that actually gave us, and that paired with what we learned from your presentation, we started our own triple S SIP portfolio, where I'm not trying to sell anything or something like that. I'm just trying to share our observation. Our SIP portfolio today is doing much better than our lump sum portfolio, where we do some sort of market timing. Even though we continue to be long-term buy only and we do very less churning, but still the lump sum portfolio is not performing as good as our SIP portfolio. And we all, Akhilesh, myself, all our partners, all our family funds are also invested in that SIP strategy. And that is why I asked this question, because this is the reason for doing this kind of an SIP portfolio, is that you act regularly. So we talk about the compounding equation, and we I think you have written a lot on compounding, and you mentioned about most people or most investors focus on the R part, and people don't focus on the N, which is the number of years. But we went one step ahead, and we thought that Why not focus on the P? How much you can invest regularly? And if you can keep on doing that for a long period of time, the R will be taken care of if the quality of business is right. So that is why I'm happy that you continue to believe in that philosophy, and the idea is the same, that you're not there to beat the market or you generate an alpha. You're trying to create a system where you invest regularly to become financially free, right? So moving on to the next question, Vishal. Uh, Actually, you hinted towards this in one of your previous answers. So in the early days of Safal Niveshak, you used to share a lot of useful content on specific stocks. If I remember correctly, you also shared your portfolio on your blog at that point of time. I'm sure the reason for sharing the portfolio was completely different from what we see today. And so I would like to ask you, what made you stop doing that? And what would be your suggestion to an average investor like us, who are always bombarded with portfolios of so many investors slash influencers on social media? So I think since you have seen this all along, you would be in a much better position to speak on that.
Yeah, so Ankit, I think one of the biggest learnings, as I mentioned, as I age, is that I've learned that in the initial few decades of your life, maybe probably first 30, 40 years of your life, you add a lot of things to your life. You'll add a lot of baggage to your life. And in the second half of life, you try to subtract a lot of those things because you think that those are not things either that you need, or those are things that don't make you comfortable. Right. So writing about stocks, even when I was not really recommending stocks, but writing about stocks, writing about my portfolio, I think I realized that that ended up messing up with my mind. Though I was not really worried about what people were saying or whether people were doing what they were doing, and I had no misaligned incentives. I had no bad intentions of sharing my portfolio so that people buy and I probably get rich. I had no such influence, right? Even then, I'd never really try to hard sell my portfolio, all those kind of things, the kind of things that you see today on social media so rampantly, right? But I realized that that really messed up with my mind. I ended up a lot of time justifying, even I had no reasons to justify, to a lot of people, a lot of emails that came in that, oh, I bought a stock because that you wrote about, I bought a stock that you recommended, even when I had clearly specified that I had never recommended stocks. I made some mistakes that people bought, right? I wrote in the initial parts, if you remember, I wrote an analysis on opto circuits, right? So my idea with Stock Talk was not to write on companies that I like. My idea was Stock Talk was to write on companies that people wanted me to write about in terms of researching a business and writing about it. Right. So ended with a lot of mistakes, and people participated in that mistake. They lost money. They sent me emails, even when I have always tried to live with an inner scorecard that ended up messing up with my mind. And I tried to change the Stock Talk in a multiple way in terms of multiple designs of that. I invited people to write Stock Talks as well. So, but gradually, as I understand that after researching and writing on stocks for the previous 8 years of my career, the first 8 years of my career, right, when I was working on a job, right, I've never found it comfortable. I used to write about stocks so that more people read my website, because I realized that when you write about stocks, there are much wider readership and more people take on to your content and more people share it. But that's something which I gradually have stopped wanting, right? So I've stopped wanting people to share my content just because I want to get it shared, or I want to create a headline. I want to create a content that gets shared just for the sake of it. If something is not making me comfortable, I'm not going to do that. I have not really talked about stocks in public, and people again keep asking me about my CAGRs and all those kind of things. I don't really care, right? I am not accountable to anyone. I am just accountable to me and my family, right? So I have earned enough money, enough CAGR to be able to speak my mind, to write whatever I want, to sell and not forcibly sell my courses and newsletters, to live a life which I want. And if that is not enough, I have no really CAGR. There's no real enough CAGR that you can earn a world if you cannot really uh, 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 convert into a life, the kind of life that I think I'm living, which I'm very happy about. So I've stopped doing things which make me uncomfortable. That was messing with my mind. Writing or talking about my stocks was messing with my mind, and I have stopped doing that. I plan to again restart it in a small way by writing a short analysis of businesses, right? Generally, just giving out numbers and just talking about numbers. I plan to do it, but I'm not really sure. whether I'm going to do it on an open public platform or to newsletter subscribers, all those kind of things. But yeah, that's something which is on the most of my priority list in terms of the work that I want to do. I want to talk about principles, which I have already talked about so many times in the past 11 years. I want to talk about basically, I want to create content that maybe 2 generations from now, right? If Safal Niveshak website still exists, right? Those principles or that content is still going to be relevant at that point of time. Right? Stocks are not going to be relevant. Stock analysis is not going to be relevant, right? Principles are going to be relevant. Behavior, mental models are going to be relevant. And that is what I want to create content on, right? So if you're writing something, you rather write something that's going to survive for the next 100 years, not something that's going to lose its charm in the next one day and you get a lot of tweets and retweets and reshares and all those kind of things and it dies down, right? So aim for the, as I said, right, aim for the stars, right? Even if you are average, you be fine with settling with average, but you at least aim for the stars. So when I write about principles and when I write about behavior and mental models and Charlie Munger and Warren Buffett, I try to aim for the stars.
Very good.
And
Right,
it doesn't, by the way, it doesn't mean that people who are writing, and you guys are writing on stocks, it doesn't mean that I find people writing on stocks and researching stocks is a bad idea. It's a very good idea when you try to educate people how to do analysis on stocks in the right way and what kind of businesses that you think are good. But what I'm not happy about is the way stocks have been pushed, the way the stock analysis and the idea of getting rich has been pushed even by so many influencers, or what I say, finfluencers on the on social media everywhere with huge amount of following, right? I see a lot of mis-selling. I just warn everyone I come across, right, that be very careful of what you are getting into, right? I remember, I think there was a quotation from Mark Twain who said that it's very easy to fool someone than to teach that person that you have been fooled, right? So you'll find most people out there on social media fooling people, right? But I really appreciate work when people try to educate people that you have been fooled and this is what you need to do to not getting fooled in the future. So so thank you for doing that kind of work as well.
Thank you so much, Vishal. It means a lot when someone like you appreciates the kind of work we do. So we do get a lot of DMs and emails where people ask us, why don't you give any target price? Why don't you give any buy, recommend, sell in your 5-minute stock idea? What is the use of this? So as you mentioned about that Mark Twain point, so it is difficult to educate them. So maybe we are doing that difficult job. We are trying to do that difficult job because what we see all around is it's very easy to sell hot tips. It's very easy to say, ye stock le lo, wo stock le lo. And it's so easy to make fun of people like us that they don't give any stock tips. They just write the random stuffs. But very few people appreciate the kind of effort goes through. So we read a lot of annual reports. We read a lot of on-call transcripts and then finally jot down the main positives and also the negative points. It's not that we are trying to only sell the business. We're just trying to analyze the business and bring forth both the positive and the negative so that you can take a balanced view of the business. Again, that's not a recommendation to buy a stock or not, but we always get this kind of feedback. So it really helps. And Professor Bakshi also appreciated this. You are also saying this, so that gives us the motivation to continue on this path. And probably we'll never do something like recommending stocks under SmartSync services. That's our aim. So moving on, Vishal. So since we are talking about social media right now, this brings me to the question of the power of social media. And I would want you to dwell a little more on that. How do you see social media channels like Twitter, YouTube, WhatsApp, and Telegram in the investing landscape? On one end,
Ankit, I think I missed your first part of the question. Can you just repeat that again?
Sure, Vishal. So how do you see social media channels like Twitter, YouTube, WhatsApp, and Telegram in the investing landscape? On one end, we have quality content like your 1% show. But on the other hand, we also have people taking advantage of gullible retail investors. What do you have to say about this? And Why I'm asking this question is so many of our Mission Smile members who are present here, and there will be a lot of people who will be watching the recording of this. So I want you to spend some time uh, giving your thoughts as to what to do and what not to do. I think that would be really helpful for all of us.
No, I think so. I have been on Twitter for like long as well. I have not been. I have been on YouTube through my channel where I publish the 1% shows. I have not been on WhatsApp in any investment groups. I have not been on. I started a Telegram channel for Safal Niveshak, but I have not been active in the sense that it's an inactive channel, right? Again, for sharing ideas. I think social media has been a boon in terms of connecting people, in terms of bringing ideas to people, right? I think every good thing has a bad side as well, and I think when that bad side is taken too far, I think that is what causes most problems, right? So even when it comes to Twitter, it's great to be there to soak in the ideas of so many brilliant people, brilliant minds who are on Twitter, sharing ideas freely with the world. So I think choose your network, choose the people you want to follow very wisely, right? Be very careful rather than just blindly following anyone, right? I think that having that bullshit antenna up, right, always, all the time. I think that is such an important thing when it comes to social media, because most of the stuff is like that, right? YouTube, I think, is a black hole. I just be there. I'm just be there just to go and publish my 1% shows. Otherwise, I don't really enjoy going on YouTube much, because again, there are too many people mis-selling stuff. There's too many ideas. Though YouTube has really helped a lot of people in far reaches of the country and worldwide to learn so many good things, and I think I should give them credit for that, right? But there, if you can choose between good and bad, and if you can choose between noise and signal, you're perfectly fine being on this channel as well. WhatsApp and Telegram, I think by the name, they are instant messaging platforms, right? So instant messaging in a world of instant gratification, I think, is a deadly combination, right? So I have never been a part of any WhatsApp group. There are WhatsApp groups which are created by members of Safal Niveshak, and they are there like members out there. But I've not been a part of any group so far. I think I don't really. I want to stay away from the noise. I think, as I mentioned again and again, I want to stay away from noise as much as possible. Even on Twitter, I generally uninstall Twitter from my mobile. I sometimes install it when I'm traveling, but I keep it uninstalled when I am at home, right? So that I don't really spend a lot of time over there. Because however smart you think that you are, that you are going to not spend a lot of time on Twitter and all those kind of things, you end up, I'm not sure, that's the addiction of the social media, that you end up spending a lot of time on just browsing through random stuff, right? And random videos, all those kind of things. So I think cutting them at the original, right? Saying no to a lot of noise. I think that's something which I believe in. Again, a disclaimer, not saying that the people who are part of all these channels are doing something bad, but it's not my cup of tea. I think if you want to avoid a lot of noise, misinformation in today's world, right, you would be much better off avoiding most of these channels, especially WhatsApp and Telegram, right? You can still be on Twitter, though even Twitter is now a hotbed of misinformation. YouTube is a big hotbed of misinformation, right? But I think and just to go on YouTube and see the kind of following that people selling snake oil have, right? And they are held at such high pedestals, right? So I am I'm not really surprised in a world of instant gratification and technology being there for everyone. We saw the kind of wealth destruction that happened in the cryptocurrency space, where so many youngsters had bet their initial savings, right? Forget the stock markets, right? So people with no knowledge, people with not much idea about what they are getting into, when they come on these channels and they start believing those snake oil salespeople, I think that's something which I advise people to do that, right? So be there, but keep your antennas up and differentiate between what is signal, what is noise, what is junk. Stay away from noise and junk. Focus on the signal if you can, right? And learn to separate what really matters to you for the long term. I think information has a shelf life, right? So focus on information that has a long shelf life than on information which has a short shelf life, right? So I think if you can do that, you'll be much better off using the power of social media to your favor.
That's very relevant. I wanted Vishal you to dwell upon it because both me and Akhilesh, we are friends with some really good investors who are completely unknown. So they are our age and they are doing really great work, and they are completely unknown in this world of social media.
That's
And those are the people from whom we learn the most about investing. So one of them is also a Mission Smile member, uh, Vikas Kasturi. I don't know whether he has joined today or not. So he's not on social media. He's not on Twitter. He's not on, even WhatsApp is not installed in his phone. And there are other friends also. Some of them are also lined up. I've asked them to, requested them to come as a guest speaker sometime in the future so that we can learn about the advantage of staying away from these instant gratification, which you talked about so rightly. So now, moving on, Vishal, a very simple question. If you have to start investing today with a very small capital of, say, 5 lakh or 10 lakh, how would you go about?
See, I think it largely depends on when I need that money, right? If I have 5 lakh, 10 lakh, right? If I need that money the next 5 years, I would keep that money in terms of the capital really safe. So I would rather go with a liquid fund or a fixed deposit or a short-term bank deposit or a short-term fund, debt fund, right? But if that is the money which I need beyond 10 years or beyond 5 years as well, I would put a large part of that money in equities, right? If I am very new to the markets and I don't know anything about picking stocks, I would go with mutual funds or index funds, right? But if I know something about picking stocks, I will also probably buy high quality businesses in my portfolio for the long run, right? So as I mentioned, largely depends on when I need the money. I'm assuming you're talking about, or I'm assuming you're talking about money which I need for the long term, right? Beyond 5 years, I would put almost entire of that money in equities, probably start SIPs in stocks and mutual funds in high quality business or in funds which I understand, in low cost mutual funds or index funds. So a mix of all those, not many. Maybe if I were to create a portfolio with 10 lakh rupees, right, I would probably buy maybe 5 or 6 stocks, maybe two or three mutual funds, including one index fund. I think that should be the portfolio which I think I would have to start off.
Right. So my next question, Vishal, would be, I think everybody would be interested in this. So we all know that Safal Niveshak would probably be ranked number one on the internet, both in terms of quality and quantity of useful content on Warren Buffett and Charlie Munger. So I don't think anyone in India has written so much, not just in India, I think even across the world has written as much, and not just as much meaningful content about Warren Buffett and Charlie Munger as Safal Niveshak and yourself. So how have both of them shaped your thinking as an, not just as an investor, but also as a person? And in fact, you have been able to meet Charlie Munger in person and ask him a question too. Tell us something more about that meeting too, if you can.
So first thing, I probably don't claim to have that authority even in India in terms of writing about Charlie Munger, though I have written a lot about Munger and Buffett for the past 11 years. I've also analyzed a lot of their letters, right? But I think there are a lot of great people on the internet globally as well who are doing much better work in terms of analyzing what Buffett and Munger is all about. And there's so much content out there, meaningful content out there. I think, like you mentioned, right, these two people have, or two wise men, as I have named a book for children based on stories from Buffett and Munger. So these two wise men have been probably the torch bearers in my life as an investor, thinker, decision maker for the past many years, more than 11 years, even much before I started investing or started Safal Niveshak. Right, there's so many relevant lessons, great lessons which I've learned from them. I've mentioned about those living with an inner scorecard, right? Doing work you love, right? Taking care of course, taking care of health is what Buffett has talked about, though he's enjoyed life in his own way. And I completely don't disagree or don't agree with the kind of food that he eats, but that's his life, right? And he's lived such a long life, I think, especially because he's lived with an inner scorecard and he's done work that he loves. So that advice, right? Focusing on business quality and not stock prices, focusing on the long term, being a lifelong learner. There are numerous lessons that I think probably if I were to sit down and think and talk to you about Buffett and Munger, we can go on for a few days, right? So great impact that these two gentlemen have had on my lives, and by God grace, they have survived for so many years. And I wish that they are and pray that they survive for many more years, so that more young people come into their, I think, into their circle of learning and learn more from these two people. As far as my meeting with Charlie Munger is concerned, in fact, it was not a one-to-one or a personal meeting. It was a AGM which I attended in Los Angeles in 2018 of a company called Daily Journal, where Charlie Munger is the chairman. I am not sure whether he still is the chairman. I think he stepped down, but he was chairman, and this was the first time the DJCO meeting was held in a hotel. Before that, it was such a small gathering that they used to have it in the DJCO office itself. So this was the first time. There were almost like 300, 400 people in the room, which is very, very small compared to Berkshire Hathaway, where you have 30, 40,000 people. So I've never been to Berkshire, but I thought that 300, 400 people are much more manageable, right, in terms of sitting very close to and listening to Charlie Munger. And also because the person is already 90, 93, 94 years old, right? Um, so I went there, I attended the meeting, and I realized by the time the meeting was about to end that I probably may not get another chance to talk directly to Charlie Munger. And I think again I got lucky there that the last question which was asked was my question. So I got an opportunity to ask a question to Charlie Munger, and I asked him that being a teacher of value investing, right, what advice he would give me so that I can teach better to my students and to my kids back home. And the first thing he said that it's a great question. And the moment he said it's a great question, I could not hear anything after that. I was like on ninth heaven or something like that, right? Your friend recorded it, and I got to know what Charlie Munger really said. The moment he said it's a great question, I said, I wait, gone, unconscious, semi-unconscious, right? But he said that if you know what you are trying to do, I think you've already won half the battle, right? So it was a great meeting from a bit of distance, but I think that memory is etched in my mind. I cannot really forget that slightly long distance meeting with Charlie Munger, and hold them in complete high regard. Whatever people say, and I'm sure you must have seen so many people who have tried to pull down Buffett and Munger over the years, right? For their various moves, for the mistakes that they made. But like us, they're all humans, right? They make mistakes. They come out in the open to accept their mistakes. The fact that they have compounded for 55, 60 years, not just money, but the learning for so many thousands of people worldwide without expecting anything as return is commendable. No other investor globally or in India comes even close to that, right? People say, why do you focus so much on Buffett and Munger and why not on Indian investors? I don't find Indian investors coming out in the open and teaching people selflessly, right? I see a lot of those investors who come out in the open teaching people out of their own interest. Maybe they have a portfolio service to sell, or maybe something else, right? And we know how many of such investors have created the wealth over the past few years in India, right? So I don't want to get into that. But the point I'm trying to make is that Buffett and Munger are a different class altogether. The principles are not defined by geographical boundaries. The kind of learnings that they have shared with me or shared with others, I think that's going to last so many generations. I think there's in investing and investment decision making, and also in life, I hold them in very, very high regard, right up there, right up there.
Completely agree with you, Vishal, over here. So nowadays, specifically investors who have come in the market in the last 4 5 years, they have probably not read much about Buffett and Munger because of so many other things available in the market, which is far more attractive, or which is sold in a much better package. And maybe today you are not writing as many blogs as you used to write in 2011-12 about Buffett and Munger. So maybe that is why people don't realize, the new investors, they don't realize what importance it holds to go through their letters. And so I remember during our early days, Akhilesh and myself, we actually downloaded a letter from your website only, the Buffett letters, even the partnership letter, not just the Berkshire Hathaway letter. So we took a printout, we read all the letters, we made notes, and then we made a soft copy of that notes, and then we circulated it among our friends. I don't see that happening nowadays. Even if to any new investor who comes to me and I say that you start with Buffett letters, so they come back to me and say that, sir, this is something which is not possible at all. It is such a huge volume of content to go through, and people are used to having shorter content which can be consumed in, say, less than 2 minutes, right? So I give them the notes that, okay, you start with the notes of those years from 1957. So they end up not even completing those notes. So forget about Buffett letters original. Even the notes is something which they found it too voluminous for them to consume. So that is the problem which we are having, and we are not seeking those content nowadays. So problem is in the seeker rather than in the originator, right?
I think the only content of Warren Buffett that is going to sell in today's world, if you start with a headline, 10 multi-bagger stocks to buy that Warren Buffett would have bought, right? That's going to sell like hotcakes, right? So people are looking at shortcuts, and I'm not really against people, right? They have their own ways of doing things, right? But everything which is slow and gradual and boring, right? Nobody wants to take that up in today's world of instant gratification. We know that our attention span is now even shorter than a goldfish, of less than, I think, probably 6 or 7 seconds, right? So imagine having an attention span of 6 7 seconds, grown up in a world of TikTok and YouTube, and then you offer them a Buffett letter, right? You're going to be shown the door, right? They're going to hate you for that, right? So I think Buffett said that in value investing is like inoculation. You either take it or you don't, right? So you either take Buffett's letter and read it in the first when you start loving Buffett, or you don't. You don't. You cannot really force anyone to do that.
Right. Completely agree. So we are moving towards the to the end of the session. Just last 2 3 questions, and then we'll open up for everyone. So as it is evident from your blogs and interviews, Vishal, books have been an integral part of your life. From reading great books, you moved on to writing a great one too. Tell us more about this journey and also about your latest upcoming book.
Okay, so it was in the lockdown that got the idea of writing this book that is called the Sketchbook of Wisdom, which is available on my website. And I have been doing illustrations for Safal Niveshak for a few years now, right? Creating small illustrations to explain the idea on money, investing, personal finance, and behavior, and all those kind of things. So, in fact, it was my son's, my 11-year-old son's idea that I need to write a book around illustrations, right? If I can do that, I can also write a book. So I thought of an idea of writing an investing book, but then I think that was not the right time for me to, probably that was not the first thing that I wanted to do. I wanted to write a book that could help a much wider audience, that could help my kids when they grow up and they want to go and read a book. Probably they may not read an investing book there, but they would read a book, or probably there's a great likelihood that they're going to read a book much more on life wisdom from the best people in the world, right? So and I like reading short stuff. I don't really like reading long stuff. So that is something which I wrote as well. So Sketchbook of Wisdom is like 50 ideas, one idea per page, a lot of illustrations which I've done. Right. So I've done in fact, as I mentioned, I've done everything in that book, right from writing it, editing it, laying it out in a Word, in a book software, which is InDesign. Then except the printing part, right? Then packaging the book, addressing it, labeling it, shipping it, right? So completely involved in that book, and it has been a great journey. Last 1 year and I think 2 months. It's like 14 months since I published that book. I've already sold like 4,500 copies across 42, 43 countries in the world. Right. The latest order which I got is for 160 books from a school in New Zealand. Right, not even in India. There's a school in New Zealand which has ordered 160 books for their high school kids, and I think that was the highest point of my life as an author, right? Where high school kids in a distant away country are going to read Sketchbook of Wisdom, published, printed, written in India. So that has been a great journey, right? In terms of knowing how to self-publish a book, I had a offer from a leading publisher in the country, but I did not like their terms, right? As I mentioned, I do things my own way. I'm not here for money, right? But I did not like their terms, and I said no, right? But yeah, the journey has been beautiful again in terms of writing and shipping the book and receiving amazing feedback from people. Um, uh, the next book which I'm writing is on investing. Again, it's a book where of investing principles, and it's called Shut Up and Wait. I have received a few emails where people have said that I'm not going to buy a book. How can you title it Shut Up and Wait? It's like you're scolding us. So Shut Up and Wait is not something where I'm scolding people. Shut Up and Wait is, I think, a mindset, a philosophy, right? Where which is based on the idea is that once you do the hard work, right, you just need to shut up and wait for things to flourish, right? Again, not passively waiting, but actively waiting, where you keep reviewing your ideas, keep reviewing your behavior, you as a person, and then wait for the ideas to flourish and wait for the fruits to come, right? You need to give it that end, the time that you talk about in the compounding formula, right? So shut up and wait is that idea. And that book, I think, should have come out somewhere around late August or September. Again, it's a self-published book. I don't intend to give it to a publisher. And that book is going to contain a lot of ideas, in like single page ideas on investing principles, something which has helped me a lot in the past 18, 19 years, right? So these are like notes to myself. And I'm writing this book like a letter I'm going to write to my daughter, who's going to grow up maybe around 24, 25, when she goes back and reads this book, when she's entering the world of investing. Probably when she reads this book, she gets a lot of ideas about how to behave better as an investor. So that's the idea that I want to write about. Again, nothing on stock analysis, nothing on how to pick stocks. I think there's enough smart books, enough good books written on that, right? My book is going to be more about ideas which I've learned from the best investors in the world. And yeah, I look forward to reading that book myself.
Great, great, Vishal. So, shut up and wait. If I remember correctly, this phrase was first used by Morgan Housel somewhere, right?
Morgan Housel, in fact, wrote a tweet, I think, a couple of years back. He said he showed a long-term chart of a stock which was on a way up. I think for the market as well. I think S&P 500, and he said that there should be only one book on investing with one page. It should be called "Shut Up and Wait." And last 6 months back, when I was thinking of writing a book, and I came across this tweet, I immediately wrote a message to Morgan Housel that if you are not going to write a book with this name, I'm going to write it. And he said, "Please, all yours." So I took his permission, and I'm writing this book called "Shut Up and Wait."
So, just because you shared this incident, I'm reminded of something completely opposite. I thought that I should share this with all the members. There are so many content available on social media, or on some people are also writing books where they completely copy the content of what people like Vishal, Professor Bakshi, Warren Buffett, and Charlie Munger, they keep on doing this, and they don't give them proper credit as well. So that is uh, probably this is something not related to investing directly, but this also leads to your investing character, right? So this is something which we always say to all of our friends and our community members, is that this is something which we should completely try to avoid while we share. So just like we share on Twitter about a snippet from each and every book. So we credit the book's name. So it's not like that we are sharing our own content. We are sharing a content which is from a book. But many smart investor, I should not use the word smart. Actually, I should use the word shrewd. They pick up contents from so many other places, and they don't give the credit. And as a reader, you would be thinking that this is their original content, right, Vishal? I'm sure you would agree with me on this. We're not
I
taking,
completely, I
we're not
completely
taking any
agree.
names. Yeah, but
No, there's no point taking names, but yeah, there are people. But I think that's a part and parcel of life, right? You have to go with it, right? But yeah, in the long term, people know how to differentiate things. So.
right. So coming back to the questions again. So any recent book on business or investing that you liked very much?
So I think the best book which I have read in the last 1 year is Richer, Wiser, Happier by William Green, right? Fortunately, I'm going to interviewing William Green just 2 days from now for the 1% show, right? But that book has been amazing, right? That chronicles the life journey of so many investors, a few known, a few unknown. I got to know about Nick Sleep from him. I got to know about Arnold Vandenberg from Richer, Wiser, Happier, right? So I think that's one amazing book that I would recommend anyone and everyone should read about investing. And it's not about investing; it's about living a good life and also being a good investor.
So good that you brought about Nick Sleep. So this is one book where we also got to know about Nick Sleep, and we went back and read all his letters as well. In fact, we also put out a thread on the learnings from Nick Sleep's letter, and he's probably one of the closest, uh, even though he doesn't claim it, but he's probably one of the closest clone of Warren Buffett's thinking. And he particularly coined a term called destination investing, where you are trying to think 4 5 years, not 4 5 years, 10 years, 15 years, 20 years out. how do you see the journey of the business? I don't know how many of you know about it. He was the one who invested in Amazon right in the time of 2002, 3, 4, when nobody knew about Amazon or how big Amazon can become. So I would highly recommend to read this book and also Next Leap Letters. Again, Next Leap Letters are also available free of cost, and that is why probably people don't read them, because it is available free of cost.
That's right. That's right.
So, because Vishal, sorry, I'm constantly making that mistake. I'm really sorry about that. Your all-time top 2, 3 books on investing?
No, I think again, written so much about them. So Poor Charlie's Almanac is one of them. Then I think I would rate Warren Buffett's letters. Again, they are free. Nobody reads them because they are free, right? So it's there, right up there in terms of investing and decision making. Howard Marks' memos and his book, The Most Important Thing, is there. Peter Lynch, One Upon Wall Street, is there, right? Poor Charlie's Almanac, I already mentioned. All books of Peter Bevelin, they're right up on top, right? Seeking Wisdom from Darwin to Munger, All I Want to Know Where I'm Going to Die. I think his book on Sherlock Holmes is amazing as well, right? And his book on the principles of Warren Buffett, again, it's amazing as well. All books of Nassim Taleb, right? Though they're slightly complex to read, but then given the fact that he again writes those short ideas, short paragraphs, and short stuff, right? There's so many valuable ideas which I've got from Nassim Taleb's book, right? Amazing stuff that he's written. And there are, yeah, so these are the top books, right? Of course, there are hundreds of books which are there to be read and recommended, but these are the top books as far as investing is concerned. As far as living a good life is concerned, I think Man's Search for Meaning by Viktor Frankl is amazing. Tuesdays with Maury by Mitch Albom is amazing. These are short books, right? Bhagavad Gita, again, it's all-time favorite in terms of translation. I like the translation of Eknath Easwaran. So that's one good book which I like. Yeah, I think these are the books that have really been, they're amazing books all.
I particularly liked about the Peter Bevelin books which you mentioned. So from our SmartSync services Twitter handle, we happen to quote most of our tweets through Peter Bevelin books. We keep referring to that book, all those 3 books which you have mentioned about Peter Bevelin. Those are some timeless books.
That's right. That's right. That's right.
So I think we are done with the questions right now, and we can take some questions from the members. Before you can raise your hand, I see one question on the chat box, which is from Pradeep. Hi Vishal, big fan of Safal Niveshak. Can you tell us your 3 biggest mistakes in your life? Wow, what a question.
Good, he is not asking about 3 biggest investing mistakes because I would not want to embarrass them. But yeah, I think I don't really. So I've made a lot of mistakes, right? But big mistakes in terms of probably not starting Safal Niveshak earlier in life, right? That's, I think, a mistake that we all think that I could have done this earlier in life, right? So not starting Safal Niveshak earlier in life, right? That was one big mistake. Though I don't want to change that, go back and change that. I think whatever happens, happens at the time that it's supposed to happen. So that's one big mistake. As far as investing is concerned, I think I've written about them. Buying into bad stocks without understanding the balance sheet annual report. So example was Hotel Leela Venture, where I bought and lost 45% of my capital in that stock because I did not understand the real business, the balance sheet, and I just bought it because I loved the hotel properties. So that was one mistake. Buying into a bad business just because it was trading cheap. So Arvind Limited is one example where I bought into Arvind at that time, many years back. Just because the stock was extremely cheap after I think 2008 dot-com crash, or not 2000, yeah, 2008 financial crash that we had, global financial crisis. So that was one thing. Selling good stocks early, Page Industries, I bought at around 300 rupees, sold at around 1500 rupees, multiplied my money 5 times in probably 15 months. And I thought that was too much, right? So in hindsight, that's a huge cost of omission, I think. So I think these are the mistakes that I remember the most from my investing journey as well.
Thanks so much, Vishal. So I see Avdut's hand being raised. Avdut, I've unmuted you. You can ask your question.
Hi, good morning. Can you hear me, Ankit bhai?
Yeah.
Yes.
So 2 questions. Vishal sir, I look at you as if you're my behavior coach. So whatever I have learned is through reading your letters, and you are like the person I want to reach in a behavior kind of thing. So first question, how your behavior changed over the period, and what kind of stuff you would like to tell us to be a good investor on the behavior part of focusing on the behavior part. That's one. And second, you emphasize more about thinking like businessman. So what are the key ingredients that we need to imbibe to become a thinker in the sense of business, like businessman like thinker? That's two questions I have.
So I think answering the first question easy. I think the roots of good behavior was sown in the childhood when I received a lot of spanking from my parents and my teachers for bad behavior, right? So displaying a lot of bad behavior early in lifehood, I think, and the punishment that you receive for that, instant punishment, which is unlike the stock market where the punishment is not instant and you receive it probably few years down the line, and that's the reason people end up with a lot of behavioral mistakes, right? Because the feedback is not instant. So I think getting instant punishment early for behaving badly sowed the roots of not behaving badly in most phases of life, right? And that paid off well in investing as well. I have been again and again, I mentioned that I have been a loner, so I have avoided a lot of news, a lot of clout, and a lot of meeting a lot of people. It may be a disadvantage at a lot of times, but it also saves me a lot of mistakes of groupthink. It also saves me a lot of mistakes of envy, right? It also saves me a lot of mistakes of going by what other believe rather than what I really believe, right? I believe in walking my own path, and I believe in keeping stress very low and focusing on much bigger aspects of investing, right? So that has really helped. So my understanding is that when you spend the lesser amount of time you spend on investing, the better behaved you tend to be, right? Because the more amount you spend in investing, the more you look at stocks and the more you look at businesses, the more you look at stock prices jumping up and down, the more you interact with people here and there and about each and every stock, the more you end up with behavioral mistakes, you believe it or not, right? So for me, I think the best way is to cut out all the noise. The best way is to identify my own stocks my own way and just owning them for a long period of time. That has really helped. Thinking like an owner, the second question of that you asked, I think that has really helped me in terms of behaving well, right? I am a business owner myself, and I think my investing has improved multifold after I started my own stuff in terms of Safal Niveshak and my business as well, right? So thinking like a business owner, thinking long term, not selling a stock just because the stock has fallen or people are saying that the stock is going to fall, or buying a stock just because many people are buying stocks in the market, right? So a business is not going to do, a business owner is not going to do all that, right? A business owner is just going to focus on the business. A business is owner is not going to get worried about 1 quarter or 2 quarter of bad performance if he or she knows that the next 10 years, the next 15 years are good for me. If I'm going to do things the right way, if I'm going to allocate capital well, right? So that is how you think like a business owner, right? Look at the idea of buying expensive stocks, right? So people end up buying stocks. If I were to just use the price to earnings multiple example, right? People would end up buying any kind of stocks at any kind of prices, and we have an acronym for that as well, right? BAAP, buy at any price, that people have followed in the last 2-3 years. A business owner is not going to do that. A business owner, if he or she has capital to allocate, right, he or she will be very careful of where he or she puts his money or her money, right, for long-term investing. They are not going to go by what's hot in the market, though some business owners may do that, but a sensible business owner is not going to do that, right? Owning expensive stocks is a different thing. If you bought a stock at say 25, 30 times price to earning, and it has moved to say 70, 80, 90, 100 times price to earning, people say you should sell your stock. I don't believe in that, because again, as a business owner, if my owned business, if the business which I'm running in the market, which is listed in the stock market, has reached 100 times price to earning, I'm not going to sell my stake in the business. I'm just going to keep owning it till the time the business is good, because who knows what is overpriced, right? So contradictory thing, if you're owning a high quality business which has reached a high valuation, but the business continues to do well and you visualize a good future for the business, you should not sell the stock just because the business has become overpriced, right? But if you are looking at a new business with fresh capital, you are not going to buy an expensive business, because you want to rather reinvest in your own business or the business that you already own in your portfolio, right? So this is how you think like a business owner, not like pieces of paper, thinking long term, focusing on the path. I think that should answer your question, right? So these are all ways of thinking like a business owner.
Understood. So capital allocation should be the much more focus area if we start looking at the business.
Only focus area. It
Yeah.
should be the only focus area, not just how the manager is allocating capital in the business that you're owning, but also how you are allocating your capital.
Correct. Understood. Thank you.
Welcome.
That's it from.
Ankit, you're on mute, I think.
Thank you. Thank you so much, Avdut, for asking this question. And thank you, Vishal, for explaining it so beautifully. And I think this is something which I'm hearing from the first time, that how to differentiate between BAAP investors and a sensible investor is to think from an owner's perspective. Because whatever discussion which happens on the internet, whether on Twitter or on other platforms, people try uh, to focus on other areas, wherein some people will say that probably growth at reasonable price is a much better opportunity. Some is a much better way of investing. Some people will focus on BAAP. In fact, BAAP has got a lot of following in the last 2-3 years. We know about it, right? Many people, many investors are actually following that policy. And you brought it really to the roots, wherein essentially as an investor, we are following the businessman or the businesswoman. So it makes sense to follow the owners. And an owner will probably never do something like that, that they will invest. A sensible owner, as you rightly said, a sensible owner will probably never invest their capital into a situation which is overpriced, where your incremental returns are not going to be that attractive. So that's something very, 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 very insightful and unique, which I got to learn from you today. Thank you so much, Vishal. So I'll move to the next person. Kailash, your hand is raised. So I'll just, yeah, you can ask. Kailash, you're there? Yes,
Hello.
Kailash. Yes, Kailash.
Yeah, sir. My question, sir, two questions, and those are very simple and crisp. I would like to put it the way you had actually, put your, teachings actually. So, sir, my question is, sir, actually, after Buffett and Munger, if you were to decode completely, I can understand actually the way you would have actually decoded them. You might have gone through their each and every interview, each and every writing. So who would be the third person? Who would be the third person that you would like to, decode the way you had, decoded, both Munger and Buffett? Second question is, sir, actually, as Munger actually in his recent interview has said, actually nowadays the investing has become very, very complex. Actually, they used to do the investing when there was absolutely no water in the barrel. Actually, they used to fish in that way. So as he says, actually, the investing has become complex and intense. So if in Indian context, if we were to listen, the likes of Warren and, actually Munger, actually in Indian context, who are the key persons that actually I should decode completely? It may be Indian context, I'm saying in terms of the way they talk, the way, they put up, their heart actually into any interview they give, any writing they put. So I want to know actually the Indian heroes, of, in lines of, Munger and Buffett. And sir, actually, and another extra advice I would like to give, actually, after Munger and Buffett, actually, the way I had decoded them, the third person is Naval Ravikant, actually, for me. So whether I'm on the right track or not, extra.
No, with Naval Ravikant, you cannot go wrong. I think I trust what he says. I like what he says. So I think you are in the right company of Naval Ravikant. So that's great. Talking about your first question about the third person globally, whom I would want to decode, or probably I think I have learned a lot about that person, or what he that investor's philosophy really means. I think is Ben Graham, right? The original person, right? The original guy, right? Even Buffett is a derivative of Ben Graham, plus Philip Fisher and all those, Charlie Munger as well. Right. So Ben Graham's principles that he outlined in The Intelligent Investor, that was one of the first books which I read and sort of half understood, right, what he meant to say, and understanding the idea of treating market volatility as your friend and not as an enemy, right? And also the principle of margin of safety. I think I've applied that principle of margin of safety in everything I do in terms of living life, in terms of deciding to quit my job to start Safal Niveshak, in terms of how I drive, in terms of how I invest. Right. So that principle of margin of safety, though it comes from engineering, but I think I understood the way Ben Graham explained it. I think that was one of the most important principles for me, has been all through my life. And also the idea of treating market volatility as a friend and not really as someone who's advising you. I think that's one of the best lessons that have really helped me avoid looking at the stock prices and rather focusing on the intrinsic values of the business. So if you were to ask me what my CAGR return has been, I would not be able to tell because I've not tracked my CAGR returns for the past many years. But all I track is how the intrinsic values of the underlying businesses which I own are growing. So the intrinsic values, if the earnings growth, if the return on capital of the business are good in terms of are sustainable, are doing well, I think that really keeps me happy, and that really keeps me stay put with those kind of business, and that has really helped me when I look at my portfolio over the last few years. Your second question about any Indian investor whom I want to decode, or I think sounds or is very smart whenever he or she appears on television or in any public communication. I think there are few. So one, of course, is Professor Sanjay Bakshi, who's a professor, but he's an investor guru. He's been a teacher indirectly for me for many years now. So I think his writings, his teachings, I have really devoured almost all of them. So that's one. Then, as far as investing is concerned, I think I look up to Manish Chokhani highly for the kind of things that he's professed in the past many years. Manish Chokhani is one. Then, of course, I came to know about Vinod Sethi through Manish Chokhani, and I cannot really not be impressed by the person that Vinod Sethi is, right? Despite, again, being a person who prefers solitude and who says no to most things, the fact that he agreed to spend 2.5 hours listening to me, and he stopped because I had stopped asking questions, right? I have not seen a person like him who's been such a great investor and who's willing to share all his learnings with the world without any questions asked. So then again, another person is Monish Kabrai, though Monish is, I'm not sure whether he's an Indian citizen, but he is of Indian origin, and I look up to Monish Kabrai hugely, right, for the kind of learnings, the lessons that he said, and for the fact that he's been so humble in accepting that he's been a lifelong cloner. He's copied things and he's applied his own way. Not many people would do that. In fact, no one else I've seen who said that I've been a shameless cloner all my life, right? So the humility with which these people have invested their money over the past many years, the openness with which they have shared their learnings with people out there without expecting anything in return, I think that makes them amazing people. I cannot think of others. Yeah, in terms of young people, again, since I have talked to a lot of these people, I think Samit Vartak of Sage One Capital is one person that I look up to. Kuntal Shah of Oaklane Capital is another person I look up to. Durgesh Shah and then Nimish Shah. They're all these guys who are there, right? Not many in the public, not many very vocal in the public, but yeah, whenever they speak, they make so much sense. So yeah, these are the people who impress me a lot.
Thanks a lot, sir. Thanks a lot. And actually, sir, and we will not have to actually envy about the Monish, actually, who has the authority to say, to Charlie that I'm coming for dinner. So he's the most privileged one also.
That's right. He's earned it. He's earned it. He's earned it.
Thanks a lot, sir. Thanks a lot. Yeah, he has earned it. Yeah, yeah, you can say. So
Thank you, Vishal, and thank you, Kailash, for some great questions. Vishal, you brought about the point of Mr. Vinod Sethi. I think I shared this with you personally as well. I think probably his interview was among the top 2-3 interviews you have done. If you ask me, it is probably my best. According to me, that was the best interview, because the kind of long-term things about investing and so many things about India he talked about, that was simply superb. So I personally really enjoyed that interview. Yeah.
Same here.
Yeah. So next, I think Rishabh. Yes, Rishabh, I'm unmuting you. You can ask your question.
Thank you, Ankit, and thank you, Vishal, for doing this session. So I have two questions. Am I audible?
Yes, please go ahead.
So first one is, what in your background helped you the most when you started your value investing journey? And second is, looking back, how do you see your passion evolve with time in investment?
Sorry, I missed your first. How did my background help?
What in your background helped you the most when you started your value investing journey?
Okay, I think in terms of background, I think staying away from the crowd and thinking that more than three people give me a lot of anxiety. I think that has really helped in terms of me being the kind of person I have evolved as an investor, right? So taking decisions my own way and not really staying close to the crowd out there, right? And being fine with that, right? So that has really helped. Finance degree, I'm not really sure whether the finance degree helped, because in finance don't really, in MBA they don't teach you what really works in the investing world, right? So that I'm not really sure whether that helped. But yeah, the idea of reading books, early on in my life, coming, and that's the way I came to know about Buffett and Munger and all those kind of people, right? So I think reading early in my life, staying with solitude and making my own decisions, thinking my own way, uh, 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 taking a lot of time to think and not really focusing on gratifying myself instantly. I think these have been sown, I don't know, accidentally, by luck, right? I've been lucky I'm not really sure whether they are genetic or not, but yeah, I've learned to live that way. I was put up in a boarding school very early on in my life, class 3 to class 5, 5th, 6th, right? So I think probably that really helped me as well in hindsight, right? So I'm not saying that the kind of background I have in terms of being a loner or staying away from noise helps everyone, but that has helped me, right? So that was the first question. What was your second question?
Second question was looking back, how do you see your passion evolve with time for investing?
Passion evolved with time for investing. I think I would not say I've been like, I would not use the word passion for being an investor. I have loved, I think my passion has more been towards uh, I think long-term thinking, reading the ideas of Warren Buffett and Munger, right? And coming, as I mentioned, coming to stock market was completely an accident, right? So I never wanted to become a stock market investor, but it was purely by accident. And luckily I came to this market. Luckily I got to know about all these great guys who've really changed my life and thinking, right? So I have fallen probably in terms of passion. I have I've started loving the idea of compounding more and more as years have progressed, right? I've seen the benefits of compounding across all my life spheres, not just investing, but also in relationships, also in the habits that I have built, also in the career that I have built as a writer, author, and like the founder of Safal Niveshak. So I think all of these have combined. There's no one thing which has really helped me, but yeah, all of these things really have helped me combine, have all combined to help me settle down in life, right, and do things the way I am doing them now. So
Nice. Just one cross question on the first part, like you spoke about thinking. So I'm assuming like you spend more time on thinking than of reading nowadays, or like how is it?
yeah, that's what all useless people in life do, right? They thinking is a lazy man's job, right? What you're doing when you're closing your eyes and lying down, you're thinking, right? So yeah, I spend less time reading for sure. I'm not really sure whether most of the time I'm thinking, but yeah, I try to pause between my readings, and I read less and less because there's so much stuff that I've already read in the last many years. Of course, there's so much to be read, but then these days I prefer, for the last 2 3 years in fact, I prefer rereading the stuff that I've already read, the super text which I've already read, and that has really helped me because most of them advise you to slow down. Most of them advise you or tell you that there's so less number of things which are important in life, right? Even when it comes to Charlie Munger's mental models, though there may be thousands of mental models, but he said there are only 90 mental models that are the most important, right? And you need to pick out those 1 or 2 ideas from the most important fields, right? So focus on making your life simpler, I think, and focus on pausing and reflecting from time to time. That is how muscles build. That is how wisdom builds, right? That is how everything builds, right? 1% at a time, but you need to pause in between. You cannot just keep going, and not enjoy the scenery.
Thank you very much, Vishal.
You're welcome.
Thank you, Rishabh. So Vishal Rishabh is also a part of our Triple S team. So I'm glad that he asked some really good questions. And since we're discussing too much on the topic of thinking, I'm reminded of that wonderful quote from Herman Hesse. He wrote this in his book Siddhartha. I can think, I can wait, I can fast. So probably these three things capture everything. It's just that we don't have the courage or the inclination to follow these three things, right?
I have read Siddharth Herman Hesse, but I don't recollect this thought. But I think that has been the crux of my life, or things which have benefited me the most: fasting, thinking, and pausing. So,
Right.
so yeah, that's great.
I see Avdut again raising his hands. Avdut, I'll just unmute you. You can ask the question.
Again, dwelling on the behavior part, I just want to know what to have a stressless life. What are the behavior traits that have helped you, and how did you cultivate that? Any resources or things that have helped you in it?
No, as far as resources is concerned, I mentioned about the books, the Poor Charlie's Almanac or Charlie Munger's lessons or Peter Bublin's lessons. So those have been the resources that have really helped me. Also, reading philosophy has helped me in terms of looking at the bigger picture, looking at the broader picture, and not really going or not really worrying about what is happening now, but rather looking at a bigger picture of what may happen or what could be the outcome, right? Or like flowing like the river example which I gave you, right? Rather than trying to focus on the goal or the destination that you want to reach, you want to just be like a river and crossing all the hurdles and just flowing, keep flowing. So that has been, I think that has those have been the ways that have really molded my learning over the past few years. What exactly was your first question? I think that I answered your second question. What was the first question?
The traits you have cultivated, how it happened to have a lower stress life.
No, so I think lower stress life is a result of the learnings which I have had. I would not say that I have done something on this. I have, so again, rather than focusing on what I want to achieve, which is a stress-free life, right? I have focused on what I want to do today, which is to learn the good things in life and avoid the bad things in life, right? And that has really resulted in a stress-free life. So let me put it that way, right? Rather than focusing on the outcome, I focused on being a lifelong learner of mental models, thinking, long-term thinking, inversion, right? The power of compounding without any expectation of an outcome. That really works in investing as well. If you want to create a multi-bagger in the future, right? You don't start by investing in future multi-baggers. There are no future multi-baggers. You just find good quality businesses and you stick with them through thick and thin, and you will find a multi-bagger, right? So rather than focusing on the outcome, you focus on the path. I think that reminds me of a wonderful stanza from a poem from Harivansh Rai Bachchan, right? And this poem is called Madhushala. So Madhushala is the house of wine or a tavern where you get wine, right? So there's a stanza which says that मदिरालय जाने को घर से चलता है पीने वाला, किस पथ से जाऊं असमंजस में है वो भोला भाला, अलग अलग पथ बतलाते सब पर मैं ये बतलाता हूँ, राह पकड़ तू एक चला चल पा जाएगा मधुशाला. Which simply means that, right, the drunkard, the person who wants to drink wine, right, moves out to find a tavern or moves out to find a house of wine where he can get wine, and he does not know the way. So someone tells him to go this way, someone else tells him to go the other way. But what I tell him is that find your way, and just keep walking on that, and you will reach the house of wine, right? So that's like following a process through thick and thin, right? Following your investment process, not suffering from FOMO, not suffering from envy. Though we are humans, we are going to suffer from all that, but minimizing all the effects of all those bad behavior and bad things, right? Avoiding noise, you will find your Madhushala as far as investing is concerned, right? So I think, again, there's so many people who have said such beautiful things. I'm not really recollecting who said that, but someone said that we don't get what we need in life, but what we deserve in life, right? So be deserving. And how do we deserving? You be deserving by focusing on the process, whether it's investing or life or relationships or habit or everything, right? Focusing on that 1% daily rather than that 37 times at the end of the year, right? Focusing on the rainbow rather than what lies at the end of the rainbow. I think that has really helped me. And I think that is the best advice I would also want to give to my kids and anyone who wants to listen to my advice.
Thank you so much, and a
You're
nice
welcome.
poem on the weekends. Thank you.
Oh, you should read all poems by Harivansh Rai Bachchan. Another one, I think, Jo Beet Gai So Baat Gai. I could relate to investing, right? We all regretting the past. We all want to minimize the regret in the future, right? But he said, Jo Beet Gai So Baat Gai. अंबर के आनंद को देखो, कितने इसके तारे टूटे, कितने इसके प्यारे छूटे, जो छूट गए वो कहाँ मिले, पर उन टूटे तारों पर कब अंबर शोक मनाता है, right? जो बीत गई सो बात गई. So rather than focusing on all our regrets, right, we make a lot of investment mistakes just because we want to avoid regrets, because we have seen some mistakes happened in the past, right? Or we have seen someone else making mistakes in the past. So it's very important to learn from those mistakes, right? If you want to live a regret-free life, right? I think another idea that comes to me is from Jeff Bezos, that you foresee yourself that you are 80 years of age, you're about to die. And looking back from there, you answer a question, would I be regretting this decision in the past, in the future, sorry, right? Today, if I'm going to regret doing this, I'm not going to do it. If I'm not going to regret this, whatever is the outcome, right, I'm going to go and do it, right? So just focus on the process. Nobody knows the results, right? A PMS guy will tell you that my PMS is the best. A mutual fund is going to tell you I'm going to get you the best returns. A stock advisor is going to tell you that my stock recommendation are the best. A value investor coach is going to tell you take my workshop and you're going to achieve the best returns. Who knows who's going to be right? You just follow your path, which makes you comfortable, which makes you happy with the people that you love being with, and you just pass through life. So I
And
think follow your process. That's it. I am speak. I am taking a lot of time to speak. I apologize for that, but till the time you ask me to stop, I'll keep speaking.
Till the time you will be speaking, we'll keep on asking questions, Vishal. I can vouch you for that. And so I knew that you are a very good reader. I knew that you are a very good writer. Today I came to know that you are a very good singer as well. So the way you recited these lines, so we all know the meanings of these lines, but the way you recited that really sound really good to my ears, and I'm sure many of the other members will also agree with me here. Yeah. So moving on, I think Kamal had raised his hand. So Kamal, I'm unmuting you. You can go ahead.
Yeah, thanks, Ankit. So, Vishal, so basically, wanted to understand in terms of percentage, if possible, the role of luck. So, suppose we do follow that, we have a checklist. We are disciplined investors, and we are aware of behavioral biases, and we follow all the good value investing fundamentals to the extent possible. So, what would be in terms of percentage, what would be the role of luck in our investment journey?
I'm not really sure about the number over here, but what I understand, in the short term, luck has a higher portion in your success. In the long term, if you apply the same process, if you follow the process, right, and you achieve good results, right, luck tends to go down in proportion. I would not say that it disappears completely. Even for the long-term investors, even if you look at Ben Graham, right, if you hear or read about the story of Geico, right? This guy, along with his partner, Graham Newman, right? They were investing and they had a stated investment philosophy of not going overboard on a particular stock, not buying expensive stocks, right? And all those kind of things, which any conservative investor would have, like like Graham was always, right? But then there was this opportunity of Geico, which came their way, and they invested, I think, 25% of their investors' money in one stock, right? It was slightly expensive compared to Graham's definition, a stock which was slightly expensive. And they bet a huge amount of money over there. And Graham, when he looks back, and he mentioned that publicly, when he looked back at his investment life, Geico, if there was no Geico, there would not have been Ben Graham, right? Geico created almost probably 95% of the wealth that Graham created as an investor. One decision that went beyond the stated philosophy. And Graham said that it was purely luck, but then it was not just only luck, because that luck was also backed by years of experience, right? So luck, like love, is a verb, right? Verb means action. If you follow the right process, if you act well, if you do the hard work, right, over a period of time, luck is going to come your way, right? So Nassim Taleb again talks about the game of Russian roulette, right? So Russian roulette, one gun, six chambers, five empty chambers, one bullet, and you put it in your head and you play that game, right? A lot of people will say the probability of survival in the first shot is 83% because 5 out of 6 chambers are empty, right? So let me play the game. You are going to play that game in investment, right? When your investment, the probability of success as an investment is 85%. That's a huge probability of success. You're going to play the game because it's not a matter of life and death. But when it comes to Russian roulette, that one hit can make you a statistic, right? So you are not going to play that game even when there is huge amount of uh, 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 chance of success over there. But the person who hits for the first time and survives, would you call it a skill or luck? You would call it purely luck, because that's a game of luck. Investing is a game of luck, right? I remember like lottery, like I remember this instance of the Spanish national lottery, which gives out a huge amount of money to people who play it, right? And a few years back, the winner of that Spanish national lottery, who won some million euros or something like that, he was asked, and people came to know that he was searching for the number 48 as the last 2 digits of the lottery ticket, right? So someone asked him in the interview, why were you searching for the number 48 as the last 2 digits, and you searched for that number and you actually bought it and you won the lottery? Was there some trick to it? And he said, no, there was no trick. For the previous 7 days before buying the lottery, I saw the number 7 in my dream, and 7 into 7 is 48. And I went and bought the ticket with the last 2 digits at 48, and I won the lottery. And he thought it was skill. It was not skill. It was purely luck, right? So there are a lot of investors, a lot of people out there, we ourselves, right? We think that 7 into 7 is 48. We make money in the stock market and we think that it's largely due to a skill. No, in the short term, it's purely luck. Michael Mauboussin has written a wonderful book called The Success Equation, and he says that investing is purely a game of luck, right? But in the long term, your skill will shine through if you follow the right process. So the only way to bring the odds in your favor in a game of probability, which is investing, is through following the right process over a long period of time, right? So walking on that path to find your Madhushala, as I said, I think that is the way which is going to bring the skill element to outshine luck over a long period of time. In the short term, it's all luck. And when I say short term, it means as much as 5 years to 10 years as well. A lot of people who start at the start of a bull market, like I did in 2003, by 2008, I would have called everything my skill, right? 5 years is a long term, everything is rising, I must be skillful, I must be very smart. But it was largely luck, because the pond was rising and all the ducks were rising with it too, right? How long the pond rises, how long does it take to find out that we are all swimming naked, right? The longer it shines, the longer it rises, the longer we are in that state of denial that we are all lucky creatures to be investing in these kind of businesses. But again, as my Mauboussin says, as Buffett says, as Munger says, that investing is a game of luck. But if you want your skill to shine through, you have to follow through that process over a long period of time. Focus on the N in the compounding process and you will get lucky, right? But you will get lucky over 20 years, 30 years, and people are going to call you an overnight success.
Thanks, Vishal.
You're welcome.
If it's okay, can I ask an off question? I actually had a question with respect to Vishal's interviewing style, because I have been listening to all his one-person shows, and I've observed that inadvertently in your shows, the people being interviewed speak a lot and you don't speak. And how do you make them speak a lot? I mean, because that's great learning, right? Do you do something differently? I have not been able to understand how you make that happen.
No, I speak less because I don't want to sound dumb on a public platform. So, no, the thing is that I think people are generous, right? So, luckily for me, the kind of people I've interviewed, they have been generous. And I tell them upfront that you have all the time in the world, though people have limited time. Some like Vinod Sethi or some like Arnold Vandenberg, they have everything to give you away, right? So Arnold Vandenberg, I asked him just one question and he spoke for 2.5 hours, right? So that makes my work so easy, right? But even with people with time limitations of 1 hour, right? I just give them questions, or I think through the questions that will lead them to answer or lead them to give insights for a longer period of time. So maybe the questions, the kind of questions that I take time to research and ask them, probably that helps. But I think it's mostly the generosity of the people who keep speaking and who keep sharing insights without any boundaries. So
sure. Thanks, Vishal.
Very good point, Kamal. So especially we have to learn a lot from Vishal in terms of asking the right question and being more patient and being more shutting up more, as Vishal's new book is coming up with that same title, right? So maybe that is something which we have to learn from Vishal. Moving on to the next question, I saw one hand raised. Yeah, Dilip, I'm just unmuting you. Yeah, Dilip, go ahead. Dilip, you can go ahead. I've unmuted you. Dilip, you are there? Okay. I think maybe Dilip is not there. No problem. Anyone else wants to ask any question?
Yeah, yeah, I'm there.
Yeah, please go ahead, Dilip.
Yeah, I had downloaded the stuff from Safal Niveshak, and his cartoon skills or the diagrams he draws is just excellent, like mind-boggling. Have you learnt it somewhere, or it's just natural?
I have not really learned any illustrations or drawing. It comes naturally to me. They are all the side effects of staying away from people and in a closed room and just doing your own work. What all can you do? You can write, you can read, you can illustrate, and you can make random creatures. So that's all what I have done. So yeah, no formal training of anything like this.
Oh, thanks. Great, great.
Welcome.
So I see no further question. Akhilesh, you want to say something before we? I think Shivam has raised hand. I'll first go to Shivam then. Yes, Shivam.
Hello, sir. First of all, I'm a huge fan and really admire what you do.
Thanks, Shiva.
I remember you asking Rajiv Thakkar on your 1% show a very good question, like what does his ideal day or a typical day at work looks like? So I would like to bring that question back to you. What does your day look like?
It's very simple. Get up, do nothing, have breakfast, do nothing, sleep for some time, do nothing, and forget it. So, no, on a serious note, I think the only structure that my day has, or the only part of the day which I have kept structure, though I have tried to plan my day many times in the past. I also shared a note about how Ben Franklin used to do that, right? Morning, get up and do something, and then have breakfast and do something, all those kind of things. I have tried to create structure many times, but largely staying at home, working at home, being with my family, largely unstructured. But yeah, I do most of my writing in the morning. I do most of my reading in the morning. Get up around 6:30, right? Pack the kids off to school when the schools are on. Then I get down to writing if there's some writing to be done for that day. So I generally write my articles on the same day when I publish it. Right, the thoughts may be there. Of course, the thoughts are there, but when I have to publish, I generally write my articles on the same day. Otherwise, I'm writing for the website. I am fine-tuning the website. I am taking care of the back end of the website technology and all those kind of things. Right. So most of the work happens between morning 7:30, 8 o'clock, right, to around 11 o'clock, 12 o'clock on most days. Then I think around 1 o'clock, I have my lunch. Kids can come back around 2:30, right? So after that, it's largely unstructured. Another thing which really helps me is say half an hour, 45 minutes of reading just before I sleep. Right. So as far as structure is concerned, morning 3 or 4 hours of work, and evening, night, half an hour, 45 minutes of reading. Right. Between that, exercise, family, right, doing household work, and all those kind of things take care. So probably largely unstructured, but I think it helps. Right. So it's all working in your comfort zone. I think and not following a structure, I think also helps. Right. I have lived a mechanical life for 8 years of my life when I was working on a job. Morning 7:37 local train to South Bombay, and evening 8 o'clock, 8:30 train back to Navi Mumbai. Right. And everything is mechanical. So I never enjoyed that life. So I've not really brought too much of mechanics and too much of structure into my life now as well. But yeah, I'm sure that the important things are taken care of. Everything else happens in between. So yeah.
Yeah, thank you, sir.
You're welcome. Everything is not as structured as it seems to be, right? So you maybe think, oh, Vishal is working, he's writing so much, and he's writing a book, and he's drawing illustrations and all those kind of things. He may be so structured and so well planned. No, we are all in this together. We all have messy lives, structured, unstructured lives. We find times to work. We find times to laze around, right? I don't watch a lot of television. In fact, I don't watch any television, right? But yeah, there are times where I do nothing. right? So things happen. So that's good.
It's nice to know that, Vishal. So, Akhilesh, you want to say something? I've
Akhilesh is
unmuted
asking for
you.
my address. If he's asking for my address, I'll send him.
So, I think there is some disturbance at farm. Okay, so before, I hope there is no more hands being raised, because Vishal has been very generous and he said that he'll keep speaking until we stop asking him question. So
There are people who have not asked questions, so let me take their names. Probably I'll shame them to ask a question, right?
yeah,
So
yeah, yeah.
Adnan, any question? Amar, Harshal, Nimisha, Karan, and Manish, and there's someone with the name 2517. So any questions from you guys? Rohit, Sagar,
You
please
can
ask
raise
me a
your
question.
hands. Yes, you can raise your hands. Otherwise, I'll ask the last question.
No questions. You ask.
Sure. So, Vishal, what would be your genuine advice to our team at SmartSync Services and all our Mission Smile members?
So Ankit, Amar has raised his hand. So let me answer his question
Yeah,
first, and I'll take your point. Amar.
yeah. Let me just unmute him. Thank you. Thank you so much, Amar, for asking the question. Please go ahead.
Yeah.
Yeah, you are partly audible.
Oh, is it? Okay. First of all, a big thanks, Vishal. This was such an enlightening session. Means I have been a follower of Safal Niveshak for like quite some time, and I knew like this was going to be great. And it is just like me internalizing where I couldn't think of a question. But one thing which comes to mind, see, wherever we read, no, there are like some things which come into conflict. We talk about value investing, we talk about like getting the principle in place. But at the same time, at some time I have read about asymmetric bets, right? In the sense where you have that conviction. You also give one example in one of the responses where Geico become a game changer. So as an investor, how do we handle that? Many times there is that gut feeling which says like, okay, this is an opportunity where which you need to bet on. In my case, I don't know whether it is that middle class upbringing which kind of holds me back, or is it the risk of the bet going bad, but something holds back, and by the time you realize the opportunity passes by. Means how do we handle those situations? And many of times, like Murphy's law, right? If we pass on the opportunity, it will go what we had thought of in the first place. It goes as per that, and it becomes huge.
Yeah, I think completely agree with you. I think there's a contradictions, but life is full of contradictions, right? When we look at one side, there's something else, the other side to it as well, right? In terms of such kind of asymmetry bets that you're talking about, I think the idea is to play that game and take those bets when the probability or when the consequences of loss are not huge, right? A lot of times, again, like going by the example of Russian roulette, it is also about asymmetric bets, right? If you survive the first shot, and there's a great probability of survival, you're going to get 1 million or 2 million, $10 million or what. That's huge amount of money, right? For one bet, for one shot to your head, and you survive, right? So if you are looking at an opportunity and you understand what that opportunity is, and you think that the upside is too much, and you think that the downside, if it is there, it's not going to ruin you, you take that bet. And asymmetric bets in Russian roulette happens immediately. In investing, the payoff is going to take time, right? Whether it's asymmetric or whether it's going to lose you money or all those kind of things, it's going to take time, right? But you stay to your process, you stay true to your process, and you find those opportunities where the upside could be huge, but the downside, if it is there, and it is going to be there, right? It's not going to kill you financially, right? If you take those kind of bets, some of them are going to turn into huge winners for you. That is how I practice, right? So I am not looking at investor. When Graham invested in Geico, I'm not really sure whether he thought that Geico is going to become so huge. I'm sure he thought that it's going to be big. That's the reason he went out of his path to invest in a Geico, like a company more than 25% of his net worth and all those kind of things, right? So I'm not advising you to do that, right? But the point I'm trying to make is that Graham also said that behind that huge amount of good luck was also consistent following a process and hard work. So if you do that, and you bet on high quality businesses where the upsides could be huge, and you're not sure that upside is going to come up in the next 10, 15, 20 years. But the downside, if it is there, is not going to kill you financially. You just take it, and it can be one of those asymmetric bets for you.
Super, Vishal. Thank you so much.
You're welcome.
Akhilesh has come, so I'll just unmute Akhilesh and take his question. Akhilesh, you are unmuted. You can just start.
Ankit, I don't have a question. I just wanted to thank Vishal. He has been too kind and generous all along, not only through this interview, but from the time we have known each other. And whatever we are doing at SmartSync or even at Synconic, we take a lot of inspiration from what he has done in his own personal life. And he's a great role model. I can see now also while he is doing this interview, most of the time he's standing there. Huh? I think that is one good habit to learn from him, even from this interview, other than what he has taught us all these years, all along about investing, writing, and living life.
Akhilesh, it's not most of the time, it's all the time he's standing.
Okay, that's wonderful. I couldn't see him all the time. That's why I'm saying most of the time.
Thanks, Akhilesh.
Yeah.
Thank you. Thank you so much, Akhilesh. And I think there was one more hand being raised. Yeah, Pradeep, please go ahead. I'm unmuting you.
Hi, Vishal. Thanks for your long interview, and I mean lots of insights from your session. So I just have two questions. So one being like a follow-up question from Avdut. So you said being a business analyst, you do not mind about the PE. Like even if you buy a company at 30 or 20 PE, and even if it goes to 100 PE, you just keep holding the company as long as it performs, right? So in real-time examples like something like Reliance or a HUL, so at some point of time you see like they got overvalued, and there was something like a price correction. I mean time correction. So for like 8 years or 9 years, so the price was in the same range. I mean, meanwhile you have some other companies which had grown in the same period of time. So do you feel that, I mean, if like you feel the company is overviewed, and if you find some other opportunities, do you feel that we should be shifting to it, though the company which you're holding is performing, or do you like think that we should be holding the company even if it's overvalued?
Okay, so I think the first clarification is that when I answered to Abdut, I mentioned as a business owner and not as a business analyst, right? So that was the thinking process as a business owner, right? So that I'm not going to buy expensive stocks, but I am not going to sell stocks which I own, which have become expensive. Coming to your question about owning high quality business that you think are high quality and waiting for say 8-9 years, right, and not really shifting to opportunities which could be better, I think that is a difficult thing to do, right? Who knows when that high quality business may turn around in terms of stock price returns or the kind of wealth that you can create, right? People have waited for 8 years, 9 years. I have waited myself for 5 years, and maybe a couple of businesses that did not really do well, and they did well for me, right? If I've earlier, now that is a part of the process where I have changed a bit, right? Earlier, when I started my investing journey for the first few years, I used to follow what Ben Graham said, and Ben Graham said that he used to sell stocks if he achieved 50% return, or if he held the investment for 3 years, whichever came early, right? So 50% returns came in 1 year, he's going to sell the stock, or if there are no 50% returns, but 3 years have passed, he's going to sell the stock, right? So I used to practice that, and that's the reason I sold Swaraj Engines many years back when the stock did not do anything for 3 years. I took that 3 year as a benchmark and I sold it, which I have changed, right? Not just because Swaraj Engines has created wealth for shareholders after that, but also for the fact that thinking like a business owner, 3 years is a very short period of time for me. How long is too long? I am not really sure, right? Good quality business in today's world actually don't really wait for 7, 8, 9, 10 years to really perform, because everyone has information. People are going to find out about opportunities which are just lying there and nobody wants to pick them up, right? So that time period is also short in terms of how long does it take for a business to create value for shareholders, right? The problem is when people own a business for long years and the stock starts rising and they start making money, they are scared that whatever they have earned, they are going to lose it because they have waited for 5-6 years, right? So they sell that opportunity off. I would advise against doing that, right?
businesses take time to execute, right? Sometimes maybe for 4-5 years, nobody's watching the execution on ground, right? Like a duck, right? You are only seeing a stable duck which is floating on water. You're not seeing the speed at which the duck is actually moving its feet or fangs like underwater, right? So that's how good quality businesses do, right? And you just need to keep your faith in them. How long? I think it entirely depends on your personal conviction level. If you remain convinced with good quality businesses where the intrinsic value is rising. I'm not saying stagnant businesses and you hold on to them for 5-6 years. You keep looking at the business, keep looking at the return on incremental invested capital, keep looking at the balance sheet quality, keep looking at the management's actions, keep looking at the footprints that they are leaving year after year. Even if then the business is not, the stock is not jumping, but the business is improving and the management is doing all fine, you just stay with that business and you're going to get rewarded. If the business is stagnant and the intrinsic value is not moving, or the return on capital is stagnant or coming down, or too much competition coming in, there's no point staying with that business just thinking that you are a long-term investor and you want to stay put for the next 3-5 years more. Don't fall in love with a business. A business does not, a stock does not know that you own it, right? So you should be unemotional with an investment. Yeah, I'm not saying you sell it as soon as you make profit because you want to be unemotional and you want to just jump from one business to another, but give a business a time. And it entirely depends on your comfort level and your understanding of the entire underlying business. If the intrinsic value is rising gradually, you hold on. If it is not rising or stagnant or falling, you just move out, how much ever you love the business.
Okay. Okay. Thanks, Vishal. And just one more question. So most of us are here like working professionals. So like, what would be your advice on like time allocation? I mean, on the weekdays we are like completely occupied with work, and then like we have like family, and then we have like we want to learn about the companies we want to invest in. So what would be your advice on splitting our personal time? Like, I mean, how would we like really manage all these three very well? Just your thoughts on that.
No, as I mentioned, I think investing, the lesser amount of time you spend on investing or stocks and everything, the better off you are going to be, right? And if you aim to find out just one stock idea per year, probably aim for that. Aim to find out just one stock idea and put your heart and soul into just one stock idea. And the moment you find it, you just focus entirely on your work. I think that should be perfectly fine. The other way is to the kind of magic formula investing, which I talked about, right? Finding those high quality business and just doing SIPs and all those kind of businesses rather than focusing on intrinsic value or market timing or business quality or return on capital, right? Of course, your magic formula list is also created using return on capital and earnings yield and all those kind of things, right? So just doing SIPs on those top 10 stocks which are part of your magic formula list and all those kind of things, I think are good, right? If you're a member of Ankit's team and right, all those kind of, they are also doing research for you. So maybe take it as a starting point. I'm not saying just blindly go by what they are saying or anyone else is saying. Take it as a starting point. Take their hard work and then build upon it, right? You won't really need a lot of time because people are doing some hard work, but then be careful of the kind of people you're following, right? That is very important. Right. So approximately, right, for a working person, spending maybe half an hour on a daily basis, that is much more advisable rather than 5 hours on a weekend, right? If you can spend half an hour on a daily basis by learning about investing or businesses, right, or how to invest well, how to think about long term, I think you are going to achieve an outcome which is better than the average, right? If you don't get time, half an hour on a daily basis, maybe spending 3 or 4 hours on weekends as well, if you are really focused on investing in stocks, right, that is also a good idea. Else you simply buy an index fund or an actively managed mutual fund. There is no shame in not owning stocks, right? I tell this to all people. If you're not owning stocks, even if you are learning about investing or if you are doing workshops or getting training in stocks and picking, and you're still not convinced about picking stocks, please go and buy mutual funds or index funds and take the advantage of equities. So it's perfectly fine not having any stocks in your portfolio and just index funds. So that should solve your problem, I think.
Thanks, Vishal. Thanks for your time.
You're
I really feel like how you felt like asking the last question to Charlie Munger. I really feel like asking you the last question now. Really happy to that.
Thank you, Pradeep.
Thank you so much, Pradeep, and thank you so much, Vishal, for answering all these questions and standing all the time, not most of the time. So I think now I don't see any more hands being raised. So I still have a lot of questions, but I think we can probably put an end here with that question which I asked you some time back. What would be your advice to our team at SmartSync Services and
No, I think
all our
you
research?
guys. No, I think you guys are doing a great job, and I follow you on Twitter as well, right? So I think that's amazing. I would again want to end with probably a share right here. I don't know who said it, so I get all these things randomly, and some of them I really pick up and I write down and note down, right? So I think a lot of you may have already heard it, right? So I think someone said, "मंजिल मिल जाएगी भटकते ही सही, गुमराह तो वो है जो घर से निकले ही नहीं." Right? So you are the guys who actually moved out of home, right? Moved out of home in terms of doing the work, right? Taking that step of educating people in the right kind of investing, right? So, and I appreciate everyone who does it with the right spirit, with complete integrity, because that is how I see myself, right? So we all look at the world with our mental model. So my mental model is to look at world and to appreciate people who do honest work, because that is the kind of work I do, right? So just love the kind of work that you guys are doing. Just keep on doing, right? Whatever the naysayers say, whatever the detractors say, tell you, right, that you are doing all this and you're charging money and you this is all available for free and all those kind of things. I can understand being in this market for the past 11 years. I can understand the hard work that goes behind the midnight oils that you actually burn to bring out the high quality content to people in a world which is too noisy, right? So I think just aim to make the world a better place and just be useful to people. I think that's the only advice, and keep doing what you're doing, right? So you will also find your madhushala. We all will find a madhushala. So all the best to you and your team, Ankit and Akhilesh.
Thank you so much, Vishal. So I'm already experiencing goosebumps after listening to your last final advice. Thank you so much for this session. And I hope we will have you soon, sometime later, because you are one of the only guests who is always willing to answer more and more questions. So maybe sometime in the future we'll have another session. Maybe sometime something focused more on personal finance, because there are many people who are not into the stock market, but they need personal finance guidance, which can really help them find their madhushala, as you rightly said. Right. So thank you so much, Vishal. Thank you.
You're welcome.
And thank you so much, everyone, for asking some really good questions. And it really made the whole session enjoyable. I didn't feel like that we have spent 2.5 hours now, as I'm seeing the clock right now. So thank you. Thank you so much, Vishal.
Thank you,
Thank you.
everyone. Take care. Take care. Bye-bye.
Bye.